is now a moment to buy Nvidia because you believe in Jensen Huang, regardless of what happens with tariffs?
You know what? I might not be aggressive in buying, but I certainly have not been selling during this period. I do believe in these business models that personally I've spent time trying to understand, and it's a long game when you talk about that type of investment thesis.
I'm just curious, I want to follow up on that because you talked about how we're starting to get this kind of tight trading range where investors you're not seeing whales coming in to sell, to short sell, or to buy necessarily. Yeah. Can you provide a little bit more color on that and why then, why do we go up then? You know what I mean? Why have we been up the last 3 days?
Yeah, so everyone has various data points that they kind of lean into. Certainly there's been a lot of position squaring. We've kind of seen that in the futures market. Within State Street, we have our own data kind of around what we call institutional information around positioning. That has certainly shown a bit of position squaring. So I'm pretty comfortable saying that if you were very overweight or even underweight, you've kind of gotten to neutral. And we could talk about it from the dollar perspective. We could talk about it from tech exposure perspective. Once you get there, you are in a position to really figure out where that dry powder should go once you get more comfortable that you can model cash flows. I mean, analysts, the market, what we're trying to do is get some clarity around where cash flows are going. And right now, it's really, really hard. It hasn't become easier, but at least we're no longer exposed one way or the other. In terms of why the market, continues to creep up, it's because there is still a lot of liquidity in the system that's got to go someplace. And it's somewhat telling that the last couple of days when things calmed down a little bit, it went back into names that we became very, very familiar with. It's what we know. We understand what quality growth is in the United States. We certainly had a reason to look at Europe in a different way. Their equity markets are outperforming the US by 15%. That's a massive number when you think about it. So there are stories thematically that are easier to get your hands around, even in this environment of extreme uncertainty. And that uncertainty extends to the Fed too. What we heard from the Fed is that they know as little as we know on a day-to-day basis.
Nvidia continues to ride the AI wave as cloud giants, Amazon, Google, Meta, and Microsoft scoop up as many of its chips as they can. But during Nvidia's GTC conference last week, CEO Jensen Huang repeatedly making the case for the company's next major AI innovation, and that would be robotics. And joining us now is Yahoo Finance's Dan Howley.
That's right, Josh. I got to walk the floor of GTC last week, and really, outside of that, when Jensen took the stage during his keynote, he basically said, look, this is the future of AI. He called it physical AI, and he's talking about bipedal humanoid robots, those mechanical arms, as well as self-driving cars. He lumps that in that category as well. And NVIDIA's been in there for a while. He pointed out that it's a multi-million-dollar business for them, but they want to go even further. And so I was walking around. I saw Agility Robotics Digit robot there, kind of in this terrible routine of picking up things and putting it down and then picking them up and bringing them back where they were, as well as a prototype that NVIDIA's engineers had put together, not something they're looking to sell, but just an example of what their technology could do, of an arm that essentially was a robotic ultrasound. And you would just say, okay, you would talk into it and say, scan the liver, and it was a disembodied model torso, and it would just scan over this thing, find where the liver is, I guess, I'm not a doctor, and then give you a readout. And so this is where the company sees things going, and they call it a three-computer system. They started with their DGX system, their huge supercomputers for developing these AI models, then training them in their simulators, in their Omniverse. That's the second computer. And then the third computer is their Jetson Thor computer for robots that everything kind of runs on. Think of it as kind of like the robot's brain. And so that's what they're pushing as the future of AI, and where they see all of this development eventually going. And according to Jensen Huang, we're already starting to see some robots in production in companies. Agility Robotics is one of them. They have their Digit on the floor helping with some logistics in a factory. And then over time, we'll start to see those. He says that's really where they'll kick off, just because it's easier to keep them from, it's more guardrails, easier to keep them from falling over, bumping into people. That's where it'll be, and then eventually, perhaps we'll see them in the real world, along with those self-driving cars.
Let me ask quickly on Nvidia, because there were some reports today that got attention, which kind of raised questions about the future of its chips in China, Dan. What did you make of those headlines?
Yeah, I mean, it feels like this is kind of the continuing tit for tat. Basically, this is China saying that they have new efficiency standards and that Nvidia's H20 chips don't meet those standards. And so the issue here is that things like DeepSeek were developed on the H20. Those are chips that Nvidia can actually sell in China. And so that's really going to be an issue for them. They don't expect China to grow as far as revenue goes, though. Like the U.S. does, just because of those kind of the export controls from the U.S. and now they have these issues.
And finally, we still expect Trump, right, to impose tariffs on chips as well. What does that mean for tech products looking ahead?
Yeah, I mean, they could get more expensive. What the issue here is, it's going to be on the semiconductor, not the product itself. Depends on how they lay this out. But there's a lot of semiconductors inside your phone, your computer. You have a chip for your modem, a chip, CPU. You have GPUs in some computers, memory chips. So it depends on how this is all laid out. The long and short of it is, they travel in so many, in and out of different countries from their start to finish, these semiconductors. If you're hitting it every time it goes through a border, that's a big deal. And then if you hit it afterwards, when it's a finished product, that's an even bigger problem. It's either going to go to the semiconductor makers, the device makers, the stores, or us. And so there's going to be a lot of kind of back and forth. But this is a lot more complicated than putting a tariff on French wine. This is a multi-step process that's multiple borders, and so it'll be interesting to see how this kind of all shakes out. I just don't want my video games to be more expensive. So
No, none of us want that, Dan.
No.
That's what. Thank you, my friend. Appreciate it.
Nvidia facing potentially stricter regulations on its chips coming from China. According to a report from the Financial Times, regulators in China have been discouraging the country's tech companies from purchasing Nvidia's H20 chip since it breaches energy efficiency rules. Meantime, the U.S. adding dozens of Chinese companies to a trade blacklist over national security concerns. Now, we don't have full clarity over those names that are blacklisted yet. We should be getting that clarity throughout the week here. But I think this is intrinsically tied to the tariff tit for tat that we were seeing between the U.S. and China. I covered this a lot when I was living in the Middle East at my prior position at Bloomberg News here. And one thing that became very clear to me in that time is that China utilizes kind of these soft power rules and things like export controls. They're blaming this on energy efficiency. We know that China is the biggest emitter of carbon in the entire world. So I doubt that they are having an energy efficiency push in their government. It seems like this is a soft power play to put some pressure on the U.S. amid what is an escalating tit for tat with China. Right now, President Trump has not really focused on China, instead focusing on tariffs with Canada and Mexico, and then metals, of course. If that tariff tit for tat does kind of escalate, we could potentially see more headlines like this.
Yeah, this is essentially part of a reversion to what had taken place under Trump 1.0 in the establishment of the Export Control Reform Act of 2018. And ultimately, as you're looking across some of this in implementation, the reason why it matters this time is because one of the core theses around the trade for the broader markets, or the broader conviction trade, had been around semiconductors. And so with that in mind, and it now overflowing into semiconductors beyond just what were the hot topics back then, to really reel into this broader export reform control reform act back then, I think that's where the markets have to price in a little bit more of, once again, what comes out of Pennsylvania Avenue and what ultimately gets, or Mar-a-Lago in some cases, and what gets prioritized as the new target. At least in this interim period, Nvidia's come up in one form or another, and especially over the tail end of the Biden administration, plus the early innings of the Trump administration.
And kind of the back and forth with these regulations leave companies just running to keep track with the changing rules. Nvidia, as part of this Financial Times reporting, they said that they did prepare a solution to alter their H20 chips to be able to comply with these new energy efficiency rules coming out of Beijing, but that could hurt the performance of those chips, which is everything for Nvidia. So what will that look like for their competitive advantage against any, Chinese tech giants as well? I think it's going to be really interesting to watch.
He is backed by popular demand. B of A semiconductor analyst Vivek Arya. Vivek, good to see you.
Morning, Brad.
This is your third time on this podcast, and there is a reason. You have a very big following on the platform. They follow your Nvidia coverage. You're back from GTC, that big annual event for Nvidia. What's the state of play here? Because we've been seeing the stock down year to date. It didn't get that pop post GTC. What is going on?
Sure. So thank you for having me again, Brand. Really appreciate it. So let's talk fundamentals and then the stock. What we heard at GTC were a few important updates. Number one, for the first time, Nvidia actually outlined a path towards $1 trillion of data center spending over the next few years. And if we look at where they are today, it's only about 30 to 40% of that spending that continues to grow. There is nothing else on the planet that is as large or growing as fast. Point number one. Point number two, they went out of their way to explain to people how important this new industry of reasoning models and of test time compute, that this is a new class of models which actually takes extra time to think, but it gives you a lot more accurate answer. But that extra time to think results in computational demand can be 10 to 100 times more than what it is in traditional large language models.
It's crazy.
Right?
How does that appear? Before we get into your third point,
sure.
How does that appear in our lives at some point?
Sure. So today, if you go and do a search, whether it's an OpenAI or other models, it's going to give you a best efforts answer. But as we start to use these models for applications that are a lot more mission critical, think if you're a lawyer, if you're a doctor, right? Self-driving cars, right? So these are a lot more mission critical applications than just tell me what movies are playing right down the road. So in order for the industry, right, people always talk about what is the return on investment. The return on investment in large language models is going to come when this industry provides a lot more accuracy and reliability of answers, right? Think about, the analog I have in mind is, think about in the past when we used to have just simple cell phone service, and then we had BlackBerry, right?
So I still remember typing BlackBerry.
Exactly.
I can do it with my eyes closed. I still remember the keystrokes.
Exactly. That was actually one of the first stocks I started to cover when I joined the industry.
RIM, right?
Yeah. Exactly, research in motion. So think about the power of that having a VPN in your pocket all the time. So that is the thing, that as we start to make these applications a lot more accurate and reliable, and to make them more accurate and reliable, right, you have to go to this new class of reasoning models, right, where they are reasoning against each other, right, where they are getting data live, as opposed to just looking at all the internet data that was just there until 2021, because that was just the state of the art then. So that was the second thing that we heard, that the amount of computation required, right, is going up by a factor of 10 to 100 times. So when people freak out when they hear about a DeepSeek, they should not be, right? And here's the interesting thing. Since DeepSeek, have we heard anyone in China cut down their CapEx by 75%?
I haven't seen any of the hyperscalers cut CapEx at all.
Exactly. So CapEx has grown because they realize that the more compute you throw at a problem, the more accurate and reliable, and the more the ROI becomes over time. So that was the second thing. Third was a multi-year roadmap. Right, Blackwell shipping now, Blackwell Ultra shipping in the back half, which takes up performance by a factor of 50% because of more memory. Rubin shipping next year, Rubin Ultra the year after, and then they launched a new product called Feynman that goes all the way till 2028. Why is this important? Because when you're Microsoft or Google and you're planning over multiple years to go and actually get power, right, generation, nuclear facilities, right, restarted, you have to have that multi-year roadmap. And only this company is able to provide that certainty of roadmap and supply chain. So I think we heard a number of these factors that tell us that in order to really take advantage of the AI industry, you have to partner with Nvidia in one way, shape, or form. So the next several years, we think growth rate stays very strong. Now let's talk about the stock itself. I think what we are seeing right now is, our BofA strategist, Michael Hartnett, always, he has this 3P approach, which I find very useful, right? Profits, positioning, and policy. We just discussed the profit side, that Nvidia's sales growth, profitability, exceptionally strong, right? Take all the S&P 500 stocks, look at which is growing the fastest this year, right? That's the profit side, exceptionally strong. The positioning side is where I think we were perhaps a little bit offsides, right? in the last few years. There was a lot of money chasing, right, some of these large cap stocks, including Nvidia, both institutional and retail, whereas a lot of money was taken out of international markets. So I think some of that positioning sentiment is getting de-risked. At the start of the year, the SOX index was trading at a 30 times forward PE multiple. Now it's more like 21, 22 times. So some of that positioning, I think, fluff has been taken out.
Man, that seems cheap.
And now the policy thing, to the points you made before about the uncertainty, right, because of the policy changes here, that really impacts this global sector. So I think as the policy starts to stabilize, I think the positioning will start to come back in these names, but the profitability and the fundamentals are exceptionally strong.
When you talk to people that have invested in Nvidia, why are they selling the stock? To your point, I mean, what companies are talking about trillion-dollar total addressable markets, empowering robots and self-driving cars? Like, what's in their heads at this moment?
Sure. I think it's a matter of time frame. With any popular stock, whether it's this one, whether it's several of the other large cap tech names, it's easier to draw fast money, right? But this is an industry that happens over a period of time, right? You don't just go from doing simple conventional neural networks to large language models, to doing some of these reasoning models, right? All in a span of a week. It takes place over a period of time. The infrastructure part is still being built. I think that is what is creating this level of angst, that first the infrastructure has to be built, the tracks have to be laid, then the trains are going to come, and then you are going to optimize how much should I charge per passenger from this point to this point, right? We want to know how much should we charge passengers today. That is step 3 of the process, right? So some of it is just the difference in timeline of different investors. And the other thing in hindsight is that perhaps investors were underinvested overseas, right? And they were overinvested in the US. So some of this is a positioning statement. And of course, when you change these investments, the largest, the most liquid names, right, often tend to face the brunt, right, of that, in the early days. I think what will need to happen is that as investors start to get certainty about the US market, just as quickly we have seen the money leave, I think we might see a reconsideration, because remember, the world outside is still not as safe. I'm not a portfolio strategist, but how fast is Europe growing, right? How much can Chinese growth be dependent on for how long, right? How much of that depends on episodic government stimulus?
Rather invest in Nvidia.
Exactly.
European asset.
I think
that's not a stock recommendation. I'm just making a comparison here.
So I think that's what needs to happen. That people have to go through looking at what's happening outside. Is that reliable, or is it more reliable as to what things are done? What's the quality of earnings here, right, etc. So I think these things are not uncommon. Since I've been covering Nvidia for a decade, I've seen the stock go down 40%. 3 times, and look at what it has done over long periods of time.
After GTC, I got a note in my box. You're sticking with a bullish rating and price target. Given the concerns that you're talking about, why not downgrade?
Right. First thing is, we have to first look at fundamentals, right? That, when we look at technology stocks, it's interesting that people always talk about valuation. Valuation is always important, right? It's always there in the background. But when you cover technology stocks, you have to first consider, is the size of the market growing? Is their competitive position growing? What is their execution, looking like? Are margins continuing to, expand? And they check every one of those boxes, right? But what has perhaps changed is that this transition from Hopper to Blackwell, I think, created a little more of an execution delay. It's interesting, if you look at the stock, it peaked last year. That was right around the time the gross margins peaked at 78, 79%. Now gross margins are 71%, right? So when we speak with them, we not only talk about what's coming down the pike, we also try to get a sense for how do they see this path of gross margins going forward. So from what they are describing, gross margins can get back to mid-70s. So we have come down, and I think if in the second half we start to go back, we are going to see the opposite of what we have seen, right, with the stock. So that, I think, is a very important point, that we need to see this execution come back with this Blackwell and the following class of products. So no, I think it checks all these boxes. As we start to see the margin recovery, I think the stock should follow.
All right, hang with us, Vivek. We'll be right back on Opening Bid. We're going to go off for a quick break. All right, welcome back to Opening Bid, talking all things Nvidia, semiconductor space with B of A semiconductor analyst Vivek Arya. Before we get into some other semiconductor topics, tie this in a bow for us. Nvidia is still one of the best fundamental companies out of all the companies that you cover in your coverage universe?
Yes, and for the reason that, again, largest markets, fastest growing markets, right, best position to go after those markets. And oh, by the way, it is now trading at probably half of its earnings growth. And just to put that in context, if you take the S&P 500, it's actually trading over 2 times earnings growth. If you look at the other so-called Mag 7, they're probably trading 2.5 times their earnings growth. So I think it is also now checking this valuation box very impressively. So as we see, some of this market volatility subside, I do think fundamentals are going to come back in this stock.
Another note, staying in semis, of course, that caught my attention is you upgraded Intel, correct? New CEO there, Lip Bhutan. He was at Cadence, right?
That's right.
Why that call? So it seems like more of a call on this person as a leader, more so than a near-term call on the business, because the business is struggling.
Right. Sure. So we went from an underperform to a neutral on Intel. I think really to recognize that there is a change. With companies such as Intel, there are very important assets inside the company, right? Sometimes what is often missing is that strategic leadership to focus the company on what is most important and to avoid all the distractions. So what I think the company has done and their board has done very impressively is to select somebody who is an outsider, right? Who in the past, when he was at Cadence, it resulted, right, in those years, the stock going up, I think by a factor of anywhere between 32 to 50 times. He did a lot of restructuring, which is always painful, right? I don't want to, diminish the impact of that restructuring, but he is not wedded to a single strategy that, oh, we need to keep everything together and we are going to return Intel to its prior glory, right? Because to Intel in its current shape, which is focus on putting design and manufacturing together, we don't think that works, right?
Yeah, you've told me that repeatedly.
There is a reason why the best semiconductor companies on the planet, the Nvidias of the world, the Broadcoms of the world, the Taiwan Semis of the world, they focus on either design or manufacturing. Design is a very, very different mindset than manufacturing. Manufacturing, you are essentially it's a services industry. You are trying to serve a large number of customers. Your leading edge customers, you're not very profitable, but your lagging edge customers who you are putting on depreciated machines are extremely profitable. That requires a very different mindset than when you're always trying to be leading edge all the time with your design and manufacturing.
But we didn't get the signal initially. I think that he's going to come in and hive off or hatchet off that chip making business. Right. Did you get that sense?
No, I think so. To be fair, we have yet to hear about his last week. I think was really his first few days. So we are yet to hear about what the strategy is going to be, which is the reason why we went to a neutral and didn't go all the way to a buy, because we want to understand what the strategy is going to be, and ultimately what the earnings power is going to be in this company. Intel is a national asset. They have massive incumbency in enterprise PCs, in enterprise servers, right? And what we have learned over time is that, having incumbency in these markets can help you generate, a very good stream of profits as long as you eliminate all the distractions. So what our hope is that he's able to eliminate a lot of the distractions, put manufacturing in a place where it is viable on its own, where it's able to attract outside financial, sponsors, strategic sponsors, where it's able to go and attract business from other fabless companies. It is not there today. So I think we still need to hear about what his plans are going to be. But after a long time, for the first time, I think there is an outsider, right, in the company. And I think having that fresh look of an outsider who comes from a design industry, I do think can be very profitable for Intel.
So you think he saves Intel?
I think Intel has a much better shot of remaining viable in this industry. It's not going to be easy. Competition is not sitting still. Their competition, remember, is Nvidia, it's AMD, it's ARM, it's Taiwan Semiconductor, it's Broadcom, it's Marvell. They're not sitting still.
No, they seem Well, let's say he comes out with a roadmap. All new leaders have come in, they assess the operations, they lay people off, they input new leaders. Then a year from now, he probably may lay out, or maybe sooner, some grand plan or vision for Intel. But by the time he delivers on this vision 5 years from now, where is Nvidia? Where is AMD?
Exactly.
Can Intel ever catch up to these companies?
Right. So I think this is a case where, remember with Nvidia, the stock is behind its fundamentals. I think in the case of Intel and any turnaround situation, you will always see the stock actually respond before the fundamentals have improved, right? So what the stock was saying is that, you know, it went to $19 or $20 a number of times, and it sort of found a bottom because then we are close to its book value. At book value, we are saying that there is zero value of Intel's intellectual property, which is obviously not right, right? There is tremendous value to their IP, there is tremendous value to their incumbency, right, in enterprise. I mean, remember, despite all the execution issues, Intel still makes 7 out of every 10 CPUs on the planet.
And you wouldn't think that.
Exactly.
And you wouldn't think that this is Intel's trading near book value, and book value is just basically a value of the company's hard
Exactly.
goods.
That's what commodity memory companies trade at,
Yeah.
right? So all we are saying is that the only value in Intel is just, right, the bricks and mortar of its fabs, right? Which is obviously not the case. Now, should it really be valued as one of these growth companies? Obviously not. No. So I think what we were trying to say is that, you know, under his leadership, Intel has a better chance of adding, right, and getting recognized for its IP value because he comes from that background. You know, he was in an industry that doesn't make any hardware, and the only value it has is in design software and IP.
Is it better if the CHIPS Act goes away and Intel could just focus on making chips?
Right. You know, at this point, a lot of that money has already been appropriated. Intel was awarded $8 billion. Of that, they already have $2.2 billion, right? A lot of these fabs, remember, are in Republican areas, right? Ohio, Arizona, where they are generating, right, a lot of very, you know, good paying manufacturing jobs. So I think we have to put all those factors into consideration, that this is money that is already appropriated by the Congress, right? So usually, you know, it's harder to go but will there be a CHIPS Act 2 or 3? Probably not, right? Time will tell. But I would agree with you. I think it has been a massive distraction. The semiconductor industry did not really need it. I think there could have been other ways, right? But that's all hindsight. You know, where we are today is that they will get the money, right? But again, this IDM structure that they have, with or without CHIPS Act, I still think is a distraction. And if they continue with this IDM structure, then I think the probability of them turning this thing around just gets much harder, because in an IDM structure, what you are trying to tell you know, an AMD or a Broadcom or Marvell is, don't worry about the competition from my design side, still come and manufacture at me. And those companies are not going to do it. And then secondly, because they always know that the internal manufacturing team will always give a priority to the internal design team, right? But if these two things are separate, then I think there are independent, you know, now the design team can go, like today the design team for Intel only uses Taiwan Semi for its PC products, not for its server products. And it is significantly behind in the server industry after AMD. What if it was a separate entity? It would have a lot more flexibility in dealing with external foundries, maybe doing acquisitions in AI, right? But today it is handicapped, I think, because of this IDM structure.
Last couple minutes, got to get your hot take, as always. So Jensen met with quantum computing executives at GTC. Went a little underreported, but it was interesting nonetheless. Are you sold on the power of quantum computing, and are you sold on quantum computing stocks trading where they are trading today?
Right. So we don't cover quantum computing stocks, so I won't say anything about the stocks per se. But no, I think quantum, very important, you know, industry. You know, what we have to look at though is that if I take all the quantum companies that are out today, right, based on industry data, this is not our data, the entire industry is about $2 billion at most, right? Some of these public companies, you know, their annual sales might be 100 million, right? So it's still in that stage. And to put this 2 billion in context, the semiconductor industry this year will be 700 billion.
It's a big gap.
Okay. So that's why we are looking at something that is less than 1 or 2% of the industry. You know, the way to know when a certain new industry is important is when Taiwan Semi is willing to make chips for it. They have said nothing about doing that. So it doesn't mean that this industry is not important, doesn't mean that it's not a very high growth industry, but in the relative context of where the semiconductor industry is, it's still extremely small, right? I mean, Nvidia will do close to 200 billion in sales this year, and this entire industry will be 2 billion. That's how large it is.
No, it's good. It's good to put
right?
it. We have so many people trading these quantum computing stocks, but I mean that's important context. Real quick before I let you go, what was it like being in that room with Jensen and GTC? Can you compare this meeting to the first one you went to?
Oh, this is so much more exciting. No, I mean, yeah. So versus the GTC meetings, no, I think I've been going there for a number of years, and what's clear is that every year there is one more layer to the equation. What started out, in the early days, it used to be a gaming show, right? Just this is my next chip. Then it became this is my next gaming board, right? Then it started going to these are workstations that I can put my gaming chips in. In 2012, the whole field, the AlexNet started because of gamers who were able to reprogram their chips for data science, right? So now we are talking about racks and complete AI factories. So that, I think, has been the progression of the company, that every year it adds one more layer, software, hardware, systems, factories, right? Autonomous. That is what makes it so hard to compete against them, because you have to now go beat them in every stage of this, which is extremely hard to do.
Well, thanks for coming down here at the NASDAQ.
Welcome into Yahoo Finance's special coverage of the Nvidia 2025 GTC conference. It's the chip giant's annual event underway with expectations that the company will debut its latest flagship AI chip, the Blackwell Ultra. Nvidia CEO Jensen Huang will be taking the stage momentarily here, Josh. And ahead of that, the stock is actually trading a little bit lower here today, along with the rest of large cap tech.
Yeah, if I was an Nvidia investor, I mean, obviously, I'm looking forward to hear what Jensen Huang has to say about the new products. As you said, Jen, next gen Blackwell Ultra. What color does he give there about Blackwell Ultra in terms of efficiency, in terms of performance? Do you see any big cloud customers possibly on stage with Jensen raising their hands saying, hey, we are plenty excited too. We've signed up. We can't wait to see it. But then on top of that, of course, that's what's coming. You also open, you get some color and commentary from Jensen Huang today about what is demand like for your current portfolio as well.
Right, exactly. Now, at these conferences, he doesn't always give that color commentary. We'll see. Likely, he'll be giving some sort of technical specs, because a lot of the people there in attendance are programmers, they're people within tech, they're people who are potential customers for these chips, or software developers who use the chips, if not directly, are going to be using it because they're doing generative AI programming. So, we'll be getting some, again, the sort of technical language here, but also Jensen Huang tends to make these big pronouncements, right, about sort of where we are in the AI cycle. Sometimes he talks about what he thinks will be the next big thing, the next big wave that the company is betting on. Generative AI was not the first thing that has been in that category. He's talked in the past more about other machine learning and AI before it became generative, right? He talked a lot about the metaverse and digital twins, that is sort of planning in a virtual environment for the real world and then applying it to the real world. So, it could be, he is very good at painting a picture of our sort of technological future.
And you can see the stock's down today, and it's been under pressure, and there's different reasons for that. We can talk about the sort of broad macro concerns of investors. They were down about 1%, kind of getting worried about the economy, and obviously a lot of folks aren't as eager to own risk assets. But there are some NVIDIA-specific worries that have popped up as well. Potential new tariffs. Could there be additional export controls? I would not expect Jensen Huang in this type of event to add any color and commentary on those issues, but if you're an NVIDIA investor or an analyst who covers this stock, those are top of mind too.
Yeah, there is something that he might comment on today, and that is DeepSeek, right? The advent of DeepSeek, that China-based AI model that got a lot of attention for potentially using fewer chips than many of the other better-funded models over in the US, less powerful chips. And there's some expectation that he will discuss that and maybe spin it more positively. The comments that he has made since the introduction of DeepSeek have tried to sort of portray it more positively for NVIDIA, that it could create more demand overall. So I'll be looking for any comments that he has on that particular topic.
Yeah, it's interesting because when we were talking to analysts after the last earnings report, Julie, we were asking them, like, what is the potential catalyst to get this stock really moving in the right direction again? and they pointed to GTC. So the expectations are riding very high for Jensen Huang. Come out, really impress investors, really impress the street, not just with what's coming. Because again, what's coming now, a lot of it has been well telegraphed. It'll be interesting. We have analysts coming up later in the show, and of course they're going to get to work putting their models together and try to map out what's the potential revenue impact there. But really, they're going to be looking for, hey, what can you tell us about what you're already selling right now, and what does demand look like?
Yes.
Where's that demand coming from, and what do you expect ahead? Any color you can get there is going to be eagerly bought up by the street.
Let's say a word about the backdrop as well. The backdrop right now, as we know, markets are not very happy in this present moment, right? They've been watching tariff headlines. They've been concerned about economic uncertainty here, and that has weighed on markets. It's weighed on the Magnificent Seven. We talked to Dirk Viller of Citi last week, and he talked about the idea that the AI trade is still intact, but perhaps on pause in the short term while all these other issues are sort of working themselves out. And so even if Nvidia comes out today and says something that knocks the socks off the market, how sustainable will that momentum be is in question at a time like this.
We've talked to how many analysts who told us that when they look at big tech spending, I mean, the Mag 7, everybody's come out, I think, and banged the table and said, it looks like they continue to spend as much as ever building out their AI infrastructure. That used to be, Julie, enough. I mean, we had plenty of investors come on and say, that was my only question. If they keep spending, I keep buying Nvidia. We heard from big tech. We read their earnings reports. We listened to their conference calls. They were intent to keep spending. They either kept their spending levels or they even upped them. But still, we see Nvidia has had a rough run here despite that.
Yes. Let's take a look at the Wi-Fi Interactive for a moment here, because I've got up the NASDAQ 100, which shows us the red that is on the screen today. In addition to what you're seeing here, there's just another snapshot of it. And you see Nvidia here trading down by about 1% today. The stock on the year, this year thus far, is down about 12%. If you look at the one-year chart for Nvidia, you still see gains, actually. It's just that it has come down pretty sharply from the highs where we saw it earlier this year, reflective of sort of the losing momentum that we've seen overall for large caps tech. And it's not just the chip makers, it's sort of tech overall. Meta, by the way, just going negative on the year today, amongst the many customers on this screen of Nvidia here. And then if we zero in on and look at chip makers a little more specifically, seeing a lot of selling today. One of the exceptions is Intel. Lip Bhutan, the new CEO, taking the job today. So maybe a little bit of optimism there. And we got a report, by the way, from our man Dan Howley on the ground there at GTC, at NVIDIA's conference, that Pat Gelsinger, the former Intel CEO, is actually there in attendance, along with the other various tech luminaries that are there. But it is interesting to see Intel up on a day like this, Qualcomm gaining a little bit of ground here as well. And look here.
And look who it is.
Pat Gelsinger's at GTC?
Yeah, why don't you run out to the West Coast and have a little push-up contest?
Is Pat auditioning? I just talked to him a little bit, very little bit earlier in the week. I didn't know he was going to this thing. Come on, Pat. You got to get at me via email.
Brian Sazzi, ladies and gentlemen.
I mean, is he interviewing for his name, like to succeed Jensen? Is Jensen going executive chairman?
Anything's possible.
I don't think that's possible.
I mean, I'm just curious. But no, you guys are making great points. I'm really enjoying this NVIDIA coverage. The only point I want to make is I need to hear more about this Rubin chip. I'm sure it's something you've mentioned throughout your coverage. But what does this actually do, and how much more fast is this chip compared to some of these custom chips we're hearing? And another thing, I had this post go up on Yahoo Finance this morning. Does NVIDIA say enough to reignite the AI trade? Because as go NVIDIA's earnings and narrative, it goes the rest of the market. And it's no small surprise that NVIDIA's down, 11% or so year to date, that we've seen a sell-off in the S&P 500 and the broader market as well. So for the broader market to work, again, start to work higher, I think this NVIDIA trade needs to come back on.
Do you see the stock under pressure as a function of, hey, this is NVIDIA specific, I got worries about potential tariffs, I have worries about additional export controls, or do you see, no, it's getting swept up in sort of just the broader macro, folks getting nervous about the economy, I'm not so enthusiastic to own risk assets like I was months ago?
Now, you bring up a good point, Josh, and what bothers me with the move back in NVIDIA or the pullback, it is happening at a point where the stock isn't necessarily overvalued. Go to NVIDIA,
go to the Yahoo Finance ticker page. I mean, you can see this thing on the stats, everyone, that is only trading 25, 26 times forward earnings. It's not in this some overvalued bubble stock like Tesla was after the election of President Trump here. This is a fundamentally strong company that's likely to double data center revenue over the next 2 years. It's not overvalued, and yet the stock has still come in, which is... It's a red flag. You know?
Well, if you look at the trailing PE, right? I mean, because forward PE is based on estimates. And yes, Nvidia has largely delivered on forecast growth. But if you look at the trailing PE, it's kind of trading, if you look at it compared to the other Mag 7, I mean, there's sort of Tesla, then there's Nvidia and everything else. So it is at sort of the upper bound on a trailing PE basis. It's not crazy. It's not crazy above. It's not crazy above. No.
And then
it's not.
And then the other aspect too is that we're getting ready for this. Is that what does whatever Jensen come out with today? What does it mean to an AMD? And how much further back? I know Pat is there apparently, according to Dan Halley, our tech editor. How much further does this put Intel in the ground? Because the Intel is so far behind Nvidia. They're so far behind AMD.
Right, we've had analysts come on and say Nvidia's just so far ahead of everyone because of just the platform and Jensen has created between the hardware, the software, the networking, whatever Jensen.
And by the way, everyone, we're looking at the sort of intro video. Jensen is expected to take the stage in a few moments. So this is the same video that all of the thousands of people in attendance at GTC are watching.
I need to see his leather jacket. When he came out at CES, he was wearing like I don't know, it was like an alligator leather jacket, a little bit of different jacket for Jensen. I need to see what he comes out with. If it's the old school Jensen leather jacket, I'd say it's bullish for the stock, guys.
I don't know. Is that like sort of the Jay Powell tie indicator?
Yes, it is. Yes, it is, Julie. Yes, it is.
Jensen Huang
I need to see that old school
indicator?
motorcycle, heads down Jensen, not celebrity Jensen that came out with the alligator leather at CES. I want old school Jensen.
Something else I want to note here as we have been talking about the backdrop in the markets and as we've been watching Nvidia is the Jensen Huang playbook regarding this administration has been different than that of some of the other mega cap CEOs, right? He has not been, he wasn't at the inauguration. We haven't seen him going to sort of court President Trump either before inauguration at Mar-a-Lago or at the White House. At least if he has, we have not known about it, right? So it's been interesting. He's not taken the sort of Mark Zuckerberg, Jeff Bezos, obviously Elon Musk tack in approaching this administration, maybe just trying to stay a little more out of the crosshairs, perhaps.
Well, it would be interesting how, Jensen, listen, is a very gifted executive, and like most executives, you don't get there unless you're also also a very gifted diplomat. So my guess is Jensen is making some type of moves because he knows, like, if necessary, he wouldn't mind tariff carve-outs either, right? So depending on what he's saying in the background would be
and not an increase in export controls.
But also too, Nvidia really hasn't been he hasn't been under attack from President Trump. Zuckerberg has. All Jensen has had to worry about is sell chips that get used by everyone around the world. So maybe he's just like, you know what, I'm not gonna really get involved. I'm not getting threatened to be tossed in jail like Mark Zuckerberg. Like I'm just gonna keep doing what I do.
Another thing that we'll be looking for today is there has been this sort of training v. inference discussion. It looks like Jensen is walking onto the stage, so we'll hear more about it from him right now.
Welcome to GTC! What an amazing year. We wanted to do this at Nvidia. So through the magic of artificial intelligence, we're going to bring you to Nvidia's headquarters. I think I'm bringing you to Nvidia's headquarters. What do you think? This is where we work. This is where we work. What an amazing year it was, and we have a lot of incredible things to talk about. And I just want you to know that I'm up here without a net. There are no scripts, there's no teleprompter, and I've got a lot of things to cover, so let's get started. First of all, I want to thank all of the sponsors, all the amazing people who are part of this conference. Just about every single industry is represented. Healthcare is here, transportation, retail, Gosh, the computer industry, everybody in the computer industry is here. And so it's really, really terrific to see all of you, and thank you for sponsoring it. GTC started with GeForce. It all started with GeForce. And today, I have here a GeForce 5090. And 5090, unbelievably, 25 years later, 25 years after we started working on GeForce, GeForce is sold out all over the world. This is the 5090, the Blackwell generation, and comparing it to the 4090, look how it's 30% smaller in volume. It's 30% better at dissipating energy and incredible performance. Hard to even compare, and the reason for that is because of artificial intelligence. GeForce brought CUDA to the world. CUDA enabled AI, and AI has now come back to revolutionize computer graphics. What you're looking at is real-time computer graphics, 100% path traced. For every pixel that's rendered, artificial intelligence predicts the other 15. Think about this for a second. For every pixel that we mathematically rendered, artificial intelligence inferred the other 15. And it has to do so with so much precision that the image looks right, and it's temporally accurate, meaning that from frame to frame to frame, going forward or backwards because it's computer graphics, it has to stay temporally stable. Incredible. Artificial intelligence has made extraordinary progress. It has only been 10 years. Now, we've been talking about AI for a little longer than that. But AI really came into the world's consciousness about a decade ago. Started with perception AI, computer vision, speech recognition, then generative AI. The last 5 years, we've largely focused on generative AI, teaching an AI how to translate from one modality to another modality, text to image, image to text, text to video, amino acids to proteins, properties to chemicals, all kinds of different ways that we can use AI to generate content. Generative AI fundamentally changed how computing is done. From a retrieval computing model, we now have a generative computing model. Whereas almost everything that we did in the past was about creating content in advance, storing multiple versions of it, and fetching whatever version we think is appropriate at the moment of use. Now, AI understands the context, understands what we're asking, understands the meaning of our request, and generates what it knows. If it needs, it'll retrieve information, augments its understanding, and generate answer for us. Rather than retrieving data, it now generates answers. Fundamentally changed how computing is done. Every single layer of computing has been transformed. The last several years, the last couple, 2-3 years, major breakthrough happened. Fundamental advance in artificial intelligence. We call it agentic AI. Agentic AI basically means that you have an AI that has agency. It can perceive and understand the context of the circumstance. It can reason, very importantly, it can reason about how to answer or how to solve a problem. And it can plan in action. It can plan and take action. It can use tools because it now understands multimodality information. It can go to a website and look at the format of the website, words and videos, maybe even play a video. Learns from what it learns from that website, understands it, and come back and use that information, use that newfound knowledge to do its job. Agentic AI. At the foundation of agentic AI, of course, something that's very new, reasoning. And then, of course, the next wave is already happening. We're going to talk a lot about that today. Robotics, which has been enabled by physical AI. AI that understands the physical world. It understands things like friction and inertia, cause and effect, object permanence. When some corner doesn't mean it's disappeared from this universe. It's still there, just not seeable. And so that ability to understand the physical world, the three-dimensional world, is what's going to enable a new era of AI we call physical AI, and it's going to enable robotics. Each one of these phases, each one of these waves opens up new market opportunities for all of us. It brings more and new partners to GTC. As a result, GTC is now jam-packed. The only way to hold more people at GTC is we're going to have to grow San Jose, and we're working on it. We got a lot of land to work with. We got to grow San Jose. So that we can make GTC. I have to just, as I'm standing here, I wish all of you could see what I see. And we're in the middle of a stadium. And last year was the first year back that we did this live, and it was like a rock concert. And it was described, GTC was described as the Woodstock of AI, and this year it's described as the Super Bowl of AI. The only difference is everybody wins at this Super Bowl. Everybody's a winner. And so every single year, more people come because AI is able to solve more interesting problems for more industries and more companies. And this year, we're going to talk a lot about agentic AI and physical AI. At its core, what enables each wave and each phase of AI, three fundamental matters are involved. The first is, how do you solve the data problem? And the reason why that's important is because AI is a data-driven computer science approach. It needs data to learn from. It needs digital experience to learn from, to learn knowledge and to gain digital experience. How do you solve the data problem? The second is, how do you solve the training problem without human in the loop? The reason why human in the loop is fundamentally challenging is because we only have so much time, and we would like an AI to be able to learn at superhuman rates, at super real-time rates, and to be able to learn at a scale that no humans can keep up with. And so the second question is, how do you train the model? And the third is, how do you scale? How do you find an algorithm whereby the more resource you provide, whatever the resource is, the smarter the AI becomes? The scaling law. Well, this last year, this is where almost the entire world got it wrong. The computation requirement, the scaling law of AI is more resilient and, in fact, hyper-accelerated. The amount of computation we need at this point as a result of agentic AI, as a result of reasoning, is easily 100 times more than we thought we needed this time last year. And let's reason about why that's true. The first part is, let's just go from what the AI can do. Let me work backwards. Agentic AI, as I mentioned, at its foundation is reasoning. We now have AIs that can reason, which is fundamentally about breaking a problem down step by step. Maybe it approaches a problem in a few different ways and selects the best answer. Maybe it solves the same problem in a variety of ways and ensure it has the same answer, consistency checking. Or maybe after it's done deriving the answer, it plugs it back into the equation, maybe a quadratic equation, to confirm that, in fact, that's the right answer, instead of just one shot blurbing it out. Remember, 2 years ago, when we started working with ChatGPT, a miracle as it was, many complicated questions and many simple questions, it simply can't get right, and it's understandably so. It took a one shot, whatever it learned by studying pre-trained data, whatever it saw from other experiences, pre-trained data, it does a one-shot, blurps it out, like a savant. Now, we have AIs that can reason step by step by step, using a technology called chain of thought, best of n, consistency checking, a variety of different path planning, a variety of different techniques. We now have AIs that can reason, break a problem down, reason, step by step by step. Well, you could imagine, as a result, the number of tokens we generate, and the fundamental technology of AI is still the same. Generate the next token, predict the next token. It's just that the next token now makes up step one. Then the next token after that, after it generates step one, that step one has gone into the input of the AI again as it generates step two, and step three, and step four. So instead of just generating one token or one word after next, it generates a sequence of words that represents a step of reasoning. The amount of tokens that's generated as a result is substantially higher, and I'll show you in a second. Easily 100 times more. Now, 100 times more, what does that mean? Well, it could generate 100 times more tokens, and you can see that happening, as I explained previously. Or, the model is more complex. It generates 10 times more tokens, and in order for us to keep the model responsive, interactive, so that we don't lose our patience waiting for it to think, we now have to compute 10 times faster. And so 10 times tokens, 10 times faster, the amount of computation we have to do is 100 times more easily. And so you're going to see this in the rest of the presentation. The amount of computation we have to do for inference is dramatically higher than it used to be. Well, the question then becomes, how do we teach an AI how to do what I just described? How to execute this chain of thought? Well, one method is you have to teach the AI how to reason. And as I mentioned earlier, in training, there are two fundamental problems we have to solve. Where does the data come from? Where does the data come from? And how do we not have it be limited by human in the loop? There's only so much data and so much human demonstration we can perform. And so this is the big breakthrough in the last couple of years. Reinforcement learning, verifiable results. Basically, reinforcement learning of an AI as it attacks or tries to engage solving a problem step by step. Well, we have many problems that have been solved in the history of humanity where we know the answer. We know the equation of a quadratic equation, how to solve that. We know how to solve a Pythagorean theorem, the rules of a right triangle. We know many, many rules of math and geometry and logic and science. We have puzzle games that we could give it. Constraint type of problems like Sudoku. Those kind of problems, on and on and on. We have hundreds of these problem spaces where we can generate millions of different examples and give the AI hundreds of chances to solve it step by step by step, as we use reinforcement learning to reward it as it does a better and better job. So as a result, you take hundreds of different topics, millions of different examples, hundreds of different tries, each one of the tries generating tens of thousands of tokens. You put that all together, we're talking about trillions and trillions of tokens in order to train that model. And now with reinforcement learning, we have the ability to generate an enormous amount of tokens. Synthetic data generation, basically using a robotic approach to teach an AI. The combination of these two things has put an enormous challenge of computing in front of the industry. And you can see that the industry is responding. This is, what I'm about to show you is Hopper shipments of the top 4 CSPs. The top 4 CSPs. They're the ones with the public clouds. Amazon, Azure, GCP, and OCI. The top four CSPs, not the AI companies, that's not included, not all the startups, not included, not enterprise, not included, a whole bunch of things not included, just those 4. Just to give you a sense of comparing the peak year of Hopper and the first year of Blackwell, okay? The peak year of Hopper and the first year of Blackwell. So you can kind of see that, in fact, AI is going through an inflection point. It has become more useful because it's smarter, it can reason. It is more used. You can tell it's more used because whenever you go to ChatGPT these days, it seems like you have to wait longer and longer and longer, which is a good thing. It says a lot of people are using it with great effect. And the amount of computation necessary to train those models and to inference those models has grown tremendously. So in just 1 year, and Blackwell has just started shipping, in just 1 year, you could see the incredible growth in AI infrastructure. Well, that's being reflected in computing across the board. We're now seeing, and this is, the purple is the forecast of analysts about the next, the increase of capital expense of the world's data centers, including CSPs and enterprise and so on, the world's data centers through the end of the decade, so 2030. I've said before that I expect data center build out to reach $1 trillion, and I am fairly certain we're going to reach that very soon. Two dynamics is happening at the same time. The first dynamic is that the vast majority of that growth is likely to be accelerated, meaning we've known for some time that general purpose computing has run its course, and that we need a new computing approach. And the world is going through a platform shift from hand-coded software running on general purpose computers to machine learning software running on accelerators and GPUs. This way of doing computation is at this point past this tipping point. And we are now seeing the inflection point happening, the inflection happening in the world's data center build-outs. So the first thing is a transition in the way we do computing. Second is an increase in recognition that the future of software requires capital investment. Now, this is a very big idea. Whereas in the past, we wrote the software and we ran it on computers, in the future, the computer is going to generate the tokens for the software. And so the computer has become a generator of tokens, not a retrieval of files. From retrieval-based computing to generative-based computing, from the old way of doing data centers to a new way of building these infrastructure, and I call them AI factories. They're AI factories because it has one job and one job only, generating these incredible tokens that we then reconstitute into music, into words, into videos, into research, into chemicals or proteins. We reconstitute it into all kinds of information of different types. So the world is going through a transition in not just the amount of data centers that will be built, but also how it's built. Well, everything in the data center will be accelerated. Not all of it's AI. And I want to say a few words about this. You know, this slide is genuinely my favorite. And the reason for that is because for all of you who've been coming to GTC all of these years, you've been listening to me talk about these libraries this whole time. This is in fact what GTC is all about, this one slide. And in fact, a long time ago, 20 years ago, this is the only slide we had. One library after another library after another library. You can't just accelerate software, just as we needed an AI framework in order to create AIs, and we accelerate the AI frameworks. You need frameworks for physics and biology and multi-physics and all kinds of different quantum physics. You need all kinds of libraries and frameworks. We call them CUDA-X libraries, acceleration frameworks for each one of these fields of science. And so this first one is incredible. This is CuPy numeric. NumPy is the #1 most downloaded Python library, most used Python library in the world. Downloaded 400 million times this last year. cuLitho is and CuPy numeric is a zero-change drop-in acceleration for NumPy. So if any of you are using NumPy out there, give CuPy numeric a try. You're going to love it. cuLitho, a computational lithography library. Over the course of 4 years, we've now taken the entire process of processing lithography, computational lithography, which is the second factory in a fab. There's the factory that manufactures the wafers, and then there's the factory that manufactures the information to manufacture the wafers. Every industry, every company that has factories will have two factories in the future. The factory for what they build, and the factory for the mathematics, the factory for the AI. Factory for cars, factory for AIs for the cars, factory for smart speakers, and factories for AI for the smart speakers. And so cuLitho is our computational lithography, TSMC, Samsung, ASML, our partners Synopsys, Mentor, incredible support all over. I think that this is now at its tipping point. In another 5 years' time, every mask, every single lithography will be processed on NVIDIA CUDA. Ariel is our library for 5G, turning a GPU into a 5G radio. Why not? Signal processing is something we do incredibly well. Once we do that, we can layer on top of it AI for RAN, or what we call AI RAN. The next generation of radio networks will have AI deeply inserted into it. Why is it that we're limited by the limits of information theory? Because there's only so much information spectrum we can get, not if we add AI to it. cuOpt, numerical or mathematical optimization. Almost every single industry uses this when you plan seats and flights, inventory and customers, workers and plants, drivers and riders, so on and so forth, where we have multiple constraints, a whole bunch of variables, and you're optimizing for time, profit, quality of service, usage of resource, whatever it happens to be. NVIDIA uses it for our supply chain management. cuOpt is an incredible library. It takes what would take hours and hours, and it turns it into seconds. The reason why that's a big deal is so that we can now explore much larger space. We announced that we are going to open source cuOpt. Almost everybody is using either Gurobi or IBM CPlex or FICO. We're working with all three of them. The industry is so excited. We're about to accelerate the living daylights out of the industry. Parabricks for gene sequencing and gene analysis. Monai is the world's leading medical imaging library. Earth-2 multi-physics for predicting in very high resolution local weather. cuQuantum and CUDA-Q. We're going to have our first quantum day here at GTC. We're working with just about everybody in the ecosystem, either helping them research on quantum architectures, quantum algorithms, or in building a classical accelerated quantum heterogeneous architecture. And so really exciting work there. Equivariance and cuTensor for tensor contraction, quantum chemistry. Of course, this stack is world famous. People think that there's one piece of software called CUDA, but in fact, on top of CUDA is a whole bunch of libraries that's integrated into all different parts of the ecosystem and software and infrastructure in order to make AI possible. I've got a new one here to announce today. cuDSS, our sparse solvers, really important for CAE. This is one of the biggest things that has happened in the last year. Working with Cadence and Synopsys and Ansys and Dassault and all of the systems companies, we've now made possible just about every important EDA and CAE library to be accelerated. What's amazing is until recently, NVIDIA has been using general purpose computers running software super slowly to design accelerated computers for everybody else. And the reason for that is because we never had that software, that body of software optimized for CUDA until recently. And so now our entire industry is going to get supercharged as we move to accelerated computing. cuDF, a data frame for structured data. We now have drop-in acceleration for Spark and drop-in acceleration for Pandas. Incredible. And then we have Warp, a library for physics that runs in a Python library for physics for CUDA. We have a big announcement there. I will save it in just a second. This is just a sampling of the libraries that make possible accelerated computing. It's not just CUDA. We're so proud of CUDA. But if not for CUDA and the fact that we have such a large installed base, none of these libraries would be useful for any of the developers who use them. For all the developers that use them, you use it because, one, it's going to give you incredible speed up. It's going to give you incredible scale up. And two, because the install base of CUDA is now everywhere. It's in every cloud, it's in every data center, it's available from every computer company in the world, it's literally everywhere. And therefore, by using one of these libraries, your software, your amazing software can reach everyone. And so we've now reached the tipping point of accelerated computing. CUDA has made it possible. And all of you, this is what GTC is about, the ecosystem. All of you made this possible. And so we made a little short video for you. Thank you.
To the creators, the pioneers, the builders of the future, CUDA was made for you. Since 2006, 6 million developers in over 200 countries have used CUDA and transformed computing. With over 900 CUDA-X libraries and AI models, you're accelerating science, reshaping industries, and giving machines the power to see, learn, and reason. Now, Nvidia Blackwell is 50,000 times faster than the first CUDA GPU. These orders of magnitude gains in speed and scale are closing the gap between simulation and real-time digital twins. This is still just the beginning. We can't wait to see what you do next.
I love what we do. I love even more what you do with it. And one of the things that most touch me, in my 33 years doing this, one scientist said to me, Jensen, because of your work, I can do my life's work in my lifetime. And boy, if that doesn't touch you, well, you got to be a corpse. So this is all about you guys. Thank you. All right, so we're going to talk about AI. But you know, AI started in the cloud. It started in the cloud for a good reason, because it turns out that AI needs infrastructure. It's machine learning. If the science says machine learning, then you need a machine to do the science. And so machine learning requires infrastructure, and the cloud data centers had infrastructure. They also have extraordinary computer science, extraordinary research, the perfect circumstance for AI to take off in the cloud and the CSPs. But that's not where AI is limited to. AI will go everywhere. And we're going to talk about AI in a lot of different ways. And the cloud service providers, of course, they like our leading edge technology. They like the fact that we have full stack, because accelerated computing, as you know, as I was explaining earlier, is not about the chip. It's not even just the chip in the library, the programming model. It's the chip, the programming model, and a whole bunch of software that goes on top of it. That entire stack is incredibly complex. Each one of those layers, each one of those libraries is essentially like SQL. SQL, as you know, is called in-storage computing. It was the big revolution of computation by IBM. SQL is one library, just imagine. I just showed you a whole bunch of them. And in the case of AI, there's a whole bunch more. So the stack is complicated. They also love the fact that CSPs love that Nvidia CUDA developers are CSP customers, because in the final analysis, they're building infrastructure for the world to use. And so the rich developer ecosystem is really valued and really deeply appreciated. Well, now that we're going to take AI out to the rest of the world has different system configurations, operating environment differences, domain-specific library differences, usage differences. And so AI, as it translates to enterprise IT, as it translates to manufacturing, as it translates to robotics or self-driving cars, or even companies that are starting GPU clouds. There's a whole bunch of companies, maybe 20 of them, who started during the Nvidia time. And what they do is just one thing. They host GPUs. They call themselves GPU clouds. And one of our great partners, CoreWeave, is in the process of going public, and we're super proud of them. And so GPU clouds, they have their own requirements. But one of the areas that I'm super excited about is edge. And today we announced today that Cisco, Nvidia, T-Mobile, the largest telecommunications company in the world, Cerberus ODC, are going to build a full stack for radio networks here in the United States. And that's going to be the second stack. So that this current stack we're announcing today will put AI into the edge. Remember, $100 billion of the world's capital investments each year is in the radio networks and all of the data centers provisioning for communications. In the future, there is no question in my mind that's going to be accelerated computing infused with AI. AI will do a far, far better job adapting the radio signals, the massive MIMOs, to the changing environments and the traffic conditions. Of course it would. Of course we would use reinforcement learning to do that. Of course MIMO is essentially one giant radio robot. Of course it is. And so we will, of course, provide for those capabilities. Of course, AI could revolutionize communications. You know, when I call home, you don't have to say but that few words, because my wife knows where I work, what that condition's like. Conversation carries on from yesterday. She kind of remembers what I like, don't like. And oftentimes, just a few words, you communicated a whole bunch. The reason for that is because of context and human prior knowledge. Well, combining those capabilities could revolutionize communications. Look what it's doing for video processing. Look what I just described earlier in 3D graphics. And so, of course, we're going to do the same for edge. So I'm super excited about the announcement that we made today. T-Mobile, Cisco, Nvidia, Cerberus ODC are going to build a full stack. Well, AI is going to go into every industry. That's just one. One of the earliest industries that AI went into was autonomous vehicles. The moment I saw AlexNet, and we've been working on computer vision for a long time, the moment I saw AlexNet was such an inspiring moment, such an exciting moment. It caused us to decide to go all in on building self-driving cars. So we've been working on self-driving cars now for over a decade. We build technology that almost every single self-driving car company uses. It could be either in the data center. For example, Tesla uses lots of NVIDIA GPUs in the data center. It could be in the data center or the car. Waymo and Wave uses NVIDIA computers in data centers as well as the car. It could be just in the car. It's very rare, but sometimes it's just in the car. Or they use all of our software in addition. We work with the car industry however the car industry would like us to work with them. We build all three computers, the training computer, the simulation computer, and the robotics computer, the self-driving car computer, all the software stack that sits on top of it, models and algorithms, just as we do with all of the other industries that I've demonstrated. And so today, I'm super excited to announce that GM has selected Nvidia to partner with them to build their future self-driving car fleet. The time for autonomous vehicles has arrived, and we're looking forward to building with GM AI in all three areas. AI for manufacturing, so they can revolutionize the way they manufacture. AI for enterprise, so they can revolutionize the way they work, design cars and simulate cars, and then also AI for in the car. So AI infrastructure for GM, partnering with GM, and building with GM their AI. So I'm super excited about that. One of the areas that I'm deeply proud of, and it rarely gets any attention, is safety, automotive safety. It's called halos. In our company, it's called halos. Safety requires technology from silicon to systems, the system software, the algorithms, the methodologies, everything from diversity to ensuring diversity, monitoring and transparency, explainability. All of these different philosophies have to be deeply ingrained into every single part of how you develop the system and the software. We're the first company in the world, I believe, to have every line of code safety assessed. 7 million lines of code safety assessed. Our chip, our system software, and our algorithms are safety assessed by third parties that crawl through every line of code to ensure that it is designed to ensure diversity, transparency, and explainability. We also have filed over 1,000 patents, and during this GTC, and I really encourage you to do so, is to go spend time in the Halos workshop so that you could see all of the different things that comes together to ensure that cars of the future are going to be safe as well as autonomous. And so this is something I'm very proud of. It rarely gets any attention, and so I thought I would spend the extra time this time to talk about that. Okay, Nvidia Halos. All of you have seen cars drive by themselves. The Waymo robo-taxis are incredible. But we made a video to share with you some of the technology we use to solve the problems of data and training and diversity so that we could use the magic of AI to go create AI. Let's take a look.
Nvidia is accelerating AI development for AVs with Omniverse and Cosmos. Cosmos prediction and reasoning capabilities support AI-first AV systems that are end-to-end trainable with new methods of development. Model distillation, closed-loop training, and synthetic data generation. First, model distillation. Adapted as a policy model, Cosmos's driving knowledge transfers from a slower, intelligent teacher to a smaller, faster student inferenced in the car. The teacher's policy model demonstrates the optimal trajectory, followed by the student model learning through iterations, until it performs at nearly the same level as the teacher. The distillation process bootstraps a policy model, but complex scenarios require further tuning. Closed-loop training enables fine-tuning of policy models. Log data is turned into 3D scenes for driving closed-loop in physics-based simulation using Omniverse neural reconstruction. Variations of these scenes are created to test a model's trajectory generation capabilities. Cosmos Behavior Evaluator can then score the generated driving behavior to measure model performance. newly generated scenarios and their evaluation create a large dataset for closed-loop training, helping AVs navigate complex scenarios more robustly. Last, 3D synthetic data generation enhances AVs' adaptability to diverse environments. From log data, Omniverse builds detailed 4D driving environments by fusing maps and images, and generates a digital twin of the real world, including segmentation, to guide Cosmos by classifying each pixel. Cosmos then scales the training data by generating accurate and diverse scenarios, closing the sim-to-real gap. Omniverse and Cosmos enable AVs to learn, adapt, and drive intelligently, advancing safer mobility.
Nvidia is the perfect company to do that. Gosh, that's our destiny. Use AI to recreate AI. The technology that we showed you there is very similar to the technology that you're enjoying to take you to a digital twin we call Nvidia. All right, let's talk about data centers. That's not bad, huh? Gaussian splats, just in case. Gaussian splats. Well, let's talk about data centers. Blackwell is in full production, and this is what it looks like. It's an incredible, you know, for people, for us, this is a sight of beauty. Would you agree? This is, how is this not beautiful? How is this not beautiful? Well, this is a big deal because we made a fundamental transition in computer architecture. I just want you to know that, in fact, I've shown you a version of this about 3 years ago. It was called Grace Hopper, and the system was called Ranger. The Ranger system is about maybe about half of the width of the screen. And it was the world's first NVLink 32. 3 years ago, we showed Ranger working, and it was way too large, but it was exactly the right idea. We were trying to solve scale up. Distributed computing is about using a whole lot of different computers working together to solve a very large problem. But there's no replacement for scaling up before you scale out. Both are important, but you want to scale up first before you scale out. Well, scaling up is incredibly hard. There is no simple answer for it. You're not going to scale it up, you're not going to scale it out like Hadoop. Take a whole bunch of commodity computers, hook it up into a large network, and do in-storage computing using Hadoop. Hadoop was a revolutionary idea, as we know. It enabled hyperscale data centers to solve problems of gigantic sizes and using off-the-shelf computers. However, the problem we're trying to solve is so complex that scaling in that way would have simply cost way too much power, way too much energy. It would have never, deep learning would have never happened. And so the thing that we had to do was scale up first. Well, this is the way we scaled up. I'm not going to lift this. This is 70 pounds. This is the last generation system architecture. Is called HGX. This revolutionized computing as we know it. This revolutionized artificial intelligence. This is 8 GPUs. Each one of them is kind of like this. Okay, this is 2 GPUs, 2 Blackwell GPUs in one Blackwell package. 2 Blackwell GPUs in one Blackwell package. And there are 8 of these underneath this. Okay? And this connects into what we call NVLink 8. This then connects to a CPU shelf like that. So there's dual CPUs, and that sits on top. And we connect it over PCI Express, and then many of these get connected with InfiniBand, which turns into what is an AI supercomputer. This is the way it was in the past. This is how we started. Well, this is as far as we scaled up before we scaled out. But we wanted to scale up even further. And I told you that Ranger took this system and scaled it up by another factor of 4. And so we had NVLink 32, but the system was way too large. And so we had to do something quite remarkable, re-engineer how NVLink worked and how scale-up worked. And so the first thing that we did was we said, listen, the NVLink switches are in this system embedded on the motherboard. We need to disaggregate the NVLink system and take it out. So this is the NVLink system. Okay, this is an NVLink switch. This is the highest performance switch the world's ever made. And this makes it possible for every GPU to talk to every GPU at exactly the same time at full bandwidth. Okay, so this is the NVLink switch. We disaggregated it, we took it out, and we put it in the center of the chassis. So there are 18 of these switches in 9 different racks, 9 different switch trays, we call them. And then the switches are disaggregated. The compute is now sitting in here. This is equivalent to these 2 things in compute. What's amazing is this is completely liquid cooled. And by liquid cooling it, we can compress all of these compute nodes into one rack. This is the big change of the entire industry. All of you in the audience, I know how many of you are here. I want to thank you for making this fundamental shift from integrated NVLink to disaggregated NVLink, from air-cooled to liquid-cooled, from 60,000 components per computer or so, to 600,000 components per rack, 120 kilowatts, fully liquid cooled, and as a result, we have a 1 exaflops computer in one rack. Isn't it incredible? So this is the compute node. This is the compute node, okay? And that now fits in one of these. Now 3,000 pounds, 5,000 cables, about 2 miles worth. Just an incredible electronics. 600,000 parts, I think that's like 20 cars. 20 cars worth of parts, and integrates into one supercomputer. Well, our goal is to do this. Our goal is to do scale up, and this is what it now looks like. We essentially wanted to build this chip. It's just that no reticle limits can do this, no process technology can do this. It's 130 trillion transistors, 20 trillion of it is used for computing. So it's not like you can't reasonably build this anytime soon. And so the way to solve this problem is to disaggregate it, as I've described, into the Grace Blackwell NVLink 72 rack. But as a result, we have done the ultimate scale up. This is the most extreme scale up the world has ever done. The amount of computation that's possible here, the memory bandwidth, 570 terabytes per second. Everything in this machine is now in T's. Everything's a trillion. And you have an exaflops, which is 1,000,000 trillion floating point operations per second. Well, the reason why we wanted to do this is to solve an extreme problem. And that extreme problem, a lot of people misunderstood to be easy. And in fact, it is the ultimate extreme computing problem, and it's called inference. And the reason for that is very simple. Inference is token generation by a factory. And a factory is revenue and profit generating, or lack of. And so this factory has to be built with extreme efficiency, with extreme performance, because everything about this factory directly affects your quality of service, your revenues, and your profitability. Let me show you how to read this chart, because we're going to come back to this a few more times. Basically, you have two axes. On the x-axis is the tokens per second. Whenever you put a prompt into ChatGPT, what comes out is tokens. Those tokens are reformulated into words. It's more than a token per word, okay? And they'll tokenize things like THE could be used for the, it could be used for them, it could be used for theory, it could be used for theatrics, it could be used for all kinds of, okay? And so THE is an example of a token. They reformulate these tokens to turn into words. Well, we've already established that if you want your AI to be smarter, you want to generate a whole bunch of tokens. Those tokens are reasoning tokens, consistency checking tokens, coming up with a whole bunch of ideas so they can select the best of those ideas tokens. And so those tokens, it might be second guessing itself. It might be, is this the best work you could do? And so it talks to itself just like we talk to ourselves. And so the more tokens you generate, the smarter your AI. But if you take too long to answer a question, the customer's not going to come back. This is no different than web search. There is a real limit to how long it can take before it comes back with a smart answer. And so you have these two dimensions that you're fighting against. You're trying to generate a whole bunch of tokens, but you're trying to do it as quickly as possible. Therefore, your token rate matters. So you want your tokens per second for that one user to be as fast as possible. However, in computer sciences and factories, there's a fundamental tension between latency response time and throughput. And the reason is very simple. If you're in the large, high volume business, you batch up, it's called batching, you batch up a lot of customer demand and you manufacture a certain version of it for everybody to consume later. However, from the moment that they batched up and manufactured whatever they did, to the time that you consumed it, could take a long time. So no different for computer science, no different for AI factories that are generating tokens. And so you have these two fundamental tensions. On the one hand, you would like the customer's quality of service to be as good as possible, smart AIs that are super fast. On the other hand, you're trying to get your data center to produce tokens for as many people as possible so you can maximize your revenues. The perfect answer is to the upper right. Ideally, the shape of that curve is a square that you could generate very fast tokens per person up until the limits of the factory, but no factory can do that. And so it's probably some curve, and your goal is to maximize the area under the curve, okay, the product of X and Y, and the further you push out, more likely it means the better of a factory that you're building. Well, it turns out that in tokens per second for the whole factory and tokens per second response time, one of them requires enormous amount of computation, flops, and then the other dimension requires an enormous amount of bandwidth and flops. And so this is a very difficult problem to solve. The good answer is that you should have lots of flops and lots of bandwidth and lots of memory and lots of everything. That's the best answer to start, which is the reason why this is such a great computer. You start with the most flops you can, the most memory you can, the most bandwidth you can, of course the best architecture you can, the most energy efficiency you can, and you have to have a programming model that allows you to run software across all of this insanely hard so that you could do this. Now let's just take a look at this one demo to give you a tactile feeling of what I'm talking about. Please play it.
Traditional LLMs capture foundational knowledge, while reasoning models help solve complex problems with thinking tokens. Here, a prompt asks to seat people around a wedding table while adhering to constraints like traditions, photogenic angles, and feuding family members. Traditional LLM answers quickly with under 500 tokens. It makes mistakes in seating the guests, while the reasoning model thinks with over 8,000 tokens to come up with the correct answer. It takes a pastor to keep the peace.
Okay. As all of you know, if you have a wedding party of 300 and you're trying to find the optimal seating for everyone, that's a problem that only AI can solve or a mother-in-law can solve. And so that's one of those problems that co-op cannot solve. Okay, so what you see here is that we gave it a problem that requires reasoning, and you saw R1 goes off and it reasons about it, tries all these different scenarios, and it comes back and it tests its own answer. It asks itself whether it did it right. Meanwhile, the last generation language model does a one-shot. So the one-shot is 439 tokens. It was fast, it was effective, but it was wrong. So it was 439 wasted tokens. On the other hand, in order for you to reason about this problem, and this is just that was actually a very simple problem. You know, you just give it a few more difficult variables, and it becomes very difficult to reason through. And it took 8,000, almost 9,000 tokens, and it took a lot more computation because the model's more complex. Okay, so that's one dimension. Before I show you some results, let me explain something else. So the answer. If you look at Blackwell, you look at the Blackwell system, and it's now the scaled up NVLink 72. The first thing that we have to do is we have to take this model, and this model is not small. It's, you know, in the case of R1, people think R1 is small, but it's 680 billion parameters. Next generation models could be trillions of parameters. And the way that you solve that problem is you take these trillions and trillions of parameters and this model, and you distribute the workload across the whole system of GPUs. You can use tensor parallel. You can take one layer of the model and run it across multiple GPUs. You could take a slice of the pipeline and call that pipeline parallel and put that on multiple GPUs. You could take different experts and put it across different GPUs. We'll call it expert parallel. The combination of pipeline parallelism and tensor parallelism and expert parallelism, the number of combinations is insane. And depending on the model, depending on the workload, depending on the circumstance, how you configure that computer has to change so that you can get the maximum throughput out of it. You also sometimes optimize for very low latency, sometimes you try to optimize for throughput, and so you have to do some in-flight batching. A lot of different techniques for batching and aggregating work. And so the software, the operating system for these AI factories is insanely complicated. Well, one of the observations, and this is a really terrific thing about having a homogeneous architecture like NVLink 72, is that every single GPU could do all the things that I just described. And we observe that these reasoning models are doing a couple of phases of computing. One of the phases of computing is thinking. When you're thinking, you're not producing a lot of tokens. You're producing tokens that you're maybe consuming yourself. You're thinking. Maybe you're reading. You're digesting information. That information could be a PDF. That information could be a website. You could literally be watching a video, ingesting all of that at super linear rates. And you take all of that information and you then formulate the answer, formulate a plan to answer. And so that digestion of information, context processing, is very flops intensive. On the other hand, during the next phase is called decode. So the first part we call prefill. The next phase of decode requires floating point operations, but it requires an enormous amount of bandwidth. And it's fairly easy to calculate. You know, if you have a model and it's a few trillion parameters, well, it takes a few terabytes per second. Notice I was mentioning 576 terabytes per second. It takes terabytes per second to just pull the model in from HBM memory and to generate literally one token. And the reason it generates one token is because remember that these large language models are predicting the next token. That's why they say the next token. It's not predicting every single token, it's predicting the next token. Now we have all kinds of new techniques, speculative decoding and all kinds of new techniques for doing that faster, but in the final analysis, you're predicting the next token, okay? And so you ingest, pull in the entire model and the context, we call it a KV cache, and then we produce one token. And then we take that one token, we put it back into our brain, we produce the next token. Every single time we do that, we take trillions of parameters in, we produce one token. Trillions of parameters in, produce another token. Trillions of parameters in, produce another token. And notice that demo, we produced 8,600 tokens. So trillions of bytes of information have been taken into our GPUs and produce one token at a time, which is fundamentally the reason why you want NVLink. NVLink gives us the ability to take all of those GPUs and turn them into one massive GPU, the ultimate scale up. And the second thing is that now that everything is on NVLink, I can disaggregate the prefill from the decode, and I could decide I want to use more GPUs for prefill, less for decode, because I'm thinking a lot. It's agentic. I'm reading a lot of information. I'm doing deep research. Notice during deep research, you know, and earlier I was listening to Michael, and Michael was talking about him doing research, and I do the same thing. And we go off and we write these really long research projects for our AI, and I love doing that because, you know, I already paid for it. And I just love making our GPUs work. And nothing gives me more joy. So I write up, and then it goes off and it does all this research, and it went off to like 94 different websites, and it read all this, and I'm reading all this information, and it formulates an answer and writes the report. It's incredible, okay? During that entire time, prefill is super busy, and it's not really generating that many tokens. On the other hand, when you're chatting with the chatbot, and millions of us are doing the same thing, it is very token generation heavy. It's very decode heavy, okay? And so depending on the workload, we might decide to put more GPUs into decode, depending on the workload, put more GPUs into prefill. Well, this dynamic operation is really complicated. So I've just now described pipeline parallel, tensor parallel, expert parallel, in-flight batching, disaggregated inferencing, workload management, and then I've got to take this thing called a KV cache, I've got to route it to the right GPU, I've got to manage it through all the memory hierarchies. That piece of software is insanely complicated. And so today we're announcing the Nvidia Dynamo. Nvidia Dynamo does all that. It is essentially the operating system of an AI factory. Whereas in the past, in the way that we ran data centers, our operating system would be something like VMware. And we would orchestrate, and we still do, you know, we're a big user, we would orchestrate a whole bunch of different enterprise applications running on top of our enterprise IT. But in the future, the application is not enterprise IT, it's agents. And the operating system is not something like VMware, it's something like Dynamo. And this operating system is running on top of not a data center, but on top of an AI factory. Now we call it Dynamo for a good reason. As you know, the Dynamo was the first instrument that started the last industrial revolution, the industrial revolution of energy. Water comes in, electricity comes out. It's pretty fantastic. You know, water comes in, you light it on fire, turn it to steam, and what comes out, this is an invisible thing that's incredibly valuable. It took another 80 years to go to alternating current, but Dynamo is where it all started. Okay, so we decided to call this operating system, this piece of software, insanely complicated software, the Nvidia Dynamo. It's open source. It's open source, and we're so happy that so many of our partners are working with us on it. And one of my favorite partners, I just love them so much because of the revolutionary work that they do, and also because Aravin's such a great guy. But Perplexity is a great partner of ours in working through this. Okay, so anyhow, really, really great. Okay, so now we're gonna have to wait until we scale up all these infrastructure, but in the meantime, we've done a whole bunch of very in-depth simulation. We have supercomputers doing simulation of our supercomputers, which makes sense. And I'm now gonna show you the benefit of everything that I've just said. And remember the factory diagram. On the x-axis is tokens per second throughput, on the y-axis, tokens per second throughput of the factory, and the x-axis, tokens per second of the user experience. And you want super smart AIs, and you want to produce a whole bunch of them. This is Hopper. Okay, so this is Hopper, and it can produce for one user, for each user, about 100 tokens per second. This is 8 GPUs, and it's connected with InfiniBand, and I'm normalizing it to tokens per second per megawatt. So it's a 1 megawatt data center, which is not a very large AI factory, but anyhow, 1 megawatt, okay? And so it can produce for each user 100 tokens per second, and it can produce at this level, whatever that happens to be, 100,000 tokens per second for that 1 megawatt data center. Or it can produce about 2.5 million tokens per second, 2.5 million tokens per second for that AI factory if it was super batched up and the customer is willing to wait a very long time. Okay, does that make sense? All right, so nod. All right, because this is where, you know, every GTC, there's the price for entry, you guys know, and it's like, you get tortured with math, okay? This is the only at Nvidia do you get tortured with math. All right, so Hopper, you get 2.5. Now, what's that 2.5 million? How do you translate that? 2.5 million. Remember, ChatGPT is like $10 per million tokens, right? $10 per million tokens. Let's pretend for a second that's. I think the $10 per million tokens is probably down here. Okay, I'd probably say it's down here, but let me pretend it's up there, because 2.5 million, 10, so $25 million per second. Does that make sense? That's how you think through it. Or on the other hand, if it's way down here, then the question is, you know, so it's 100,000, just divide that by 10, okay? $250,000 per factory per second. And then, as it was 30 million seconds in a year, and that translates into revenues for that 1 megawatt data center. And so that's your goal. On the one hand, you would like your token rate to be as fast as possible so that you can make really smart AIs. And if you have smart AIs, people pay you more money for it. On the other hand, the smarter the AI, the less you can make in volume. Very sensible trade-off. And this is the curve we're trying to bend. Now, what I'm just showing you right now is the fastest computer in the world, Hopper. It's the computer that revolutionized everything. And so how do we make that better? So the first thing that we do is we come up with Blackwell with NVLink 8. Same Blackwell, that one same compute, and that one compute node with NVLink 8 using FP8. And so Blackwell is just faster, bigger, more transistors, more everything. But we like to do more than that, and so we introduce a new precision. It's not quite as simple as 4-bit floating point, but using 4-bit floating point, we can quantize the model, use less energy to do the same. And as a result, when you use less energy to do the same, you could do more. Because remember, one big idea is that every single data center in the future will be power limited. Your revenues are power limited. You could figure out what your revenues are going to be based on the power you have to work with. This is no different than, like many other industries. And so we are now a power limited industry. Our revenues will associate with that. Well, based on that, you want to make sure you have the most energy efficient compute architecture you can possibly get. Then we scale up with NVLink 72. Does that make sense? Look at the difference between that NVLink 72 FP4, and then because our architecture is so tightly integrated, and now we add Dynamo to it, Dynamo can extend that even further. Are you following me? So Dynamo also helps Hopper, but Dynamo helps Blackwell incredibly. Now, yep. Only at GTC do you get an applause for that. And so now notice what I put, those two shiny parts, that's kind of where your max Q is. That's likely where you'll run your factory operations. You're trying to find that balance between maximum throughput and maximum quality of AI. Smartest AI, the most of it. Those two, that XY intercept is really what you're optimizing for. And that's what it looks like if you look underneath those two squares. Blackwell is way, way better than Hopper. And remember, this is not ISO chips. This is ISO power. This is ultimate Moore's Law. This is what Moore's Law was always about in the past. And now here we are, 25x in one generation as ISO power. This is not ISO chips, it's not ISO transistors, it's not ISO anything. ISO power, the ultimate limiter. There's only so much energy we can get into a data center. And so within ISO power, Blackwell is 25 times. Now here's that rainbow. That's incredible. That's the fun part. Look, all the different underneath the Pareto, the frontier Pareto, we call it the frontier Pareto, under the frontier Pareto are millions of points we could have configured the data center to do. We could have parallelized and split the work and sharded the work in a whole lot of different ways. And we found the most optimal answer, which is the Pareto, the frontier Pareto, okay, the Pareto frontier. And each one of them, because of the color, shows you it's a different configuration. Which is the reason why this image says very, very clearly you want a programmable architecture that is as homogeneously fungible as possible, because the workload changes so dramatically across the entire frontier. And look, we got on the top, expert parallel 8, batch of 3000, disaggregation off, Dynamo off. In the middle, expert parallel 64 with the 26% is used for context, so Dynamo is turned on, 26% context, the other 74% is not. Batch of 64, and expert parallel of 64 on one, expert parallel 4 on the other. And then down here, all the way to the bottom, you got tensor parallel 16 with expert parallel 4, batch of 2, 1% context. The configuration of the computer is changing across that entire spectrum. And then this is what happens. So this is with input sequence length. This is a kind of a commodity test case. This is a test case that you can benchmark relatively easily. The input is 1,000 tokens. The output is 2,000. Notice earlier, we just showed you a demo where the output is very simply 9,000, right? 8,000, okay? And so obviously this is not representative of just that one chap. Now this one is more representative, and this is what, the goal is to build these next generation computers for next generation workloads. And so here's an example of a reasoning model. And in a reasoning model, Blackwell is 40 times the performance of Hopper, straight up. Pretty amazing. I've said before, somebody actually asked, why would I say that? But I said before that when Blackwell starts shipping in volume, you couldn't give hoppers away. And this is what I mean. And this makes sense. If you're still looking to buy a hopper, don't be afraid. It's okay. But I'm the chief revenue destroyer. My sales guys are going, oh no, don't say that. There are circumstances where Hopper is fine. That's the best thing I could say about Hopper. There are circumstances where you're fine. Not many. If I had to take a swing. And so that's kind of my point. When the technology is moving this fast, and because the workload is so intense and you're building these things, they're factories, we really like you to invest in the right versions. Okay, just to put it in perspective, this is what a 100 megawatt factory looks like. There's a 100 megawatt factory. You have, based on hoppers, you have 45,000 dies, 1,400 racks, and it produces 300 million tokens per second. Okay? And then this is what it looks like with Blackwell. You have 86, yeah, I know. That doesn't make any sense. Okay, so we're not trying to sell you less. Okay, our sales guys are going, Jensen, you're selling them less. This is better. Okay, and so anyways, the more you buy, the more you save. It's even better than that. Now the more you buy, the more you make, And so anyhow, remember, everything is in the context, everything is now in the context of AI factories. And although we talk about the chips, you always start from scale up. We talk about the chips, but you always start from scale up, the full scale up. What can you scale up to the maximum? I want to show you now what an AI factory looks like, but AI factories are so complicated. I just gave you an example of one rack. It has 600,000 parts. It's 3,000 pounds. Now, you've got to take that and connect it with a whole bunch of others. And so we are starting to build what we call the digital twin of every data center. Before you build a data center, you have to build a digital twin. Let's take a look at this. This is just incredibly beautiful.
The world is racing to build state-of-the-art, large-scale AI factories. Bringing up an AI gigafactory is an extraordinary feat of engineering, requiring tens of thousands of workers, from suppliers, architects, contractors, and engineers, to build, ship, and assemble nearly 5 billion components and over 200,000 miles of fiber, nearly the distance from the Earth to the Moon. The Nvidia Omniverse blueprint for AI factory digital twins enables us to design and optimize these AI factories long before physical construction starts. Here, Nvidia engineers use the blueprint to plan a 1 gigawatt AI factory, integrating 3D and layout data of the latest Nvidia DGX superpods and advanced power and cooling systems from Vertiv and Schneider Electric, and optimized topology from Nvidia Air, a framework for simulating network logic, layout, and protocols. This work is traditionally done in silos. The Omniverse blueprint lets our engineering teams work in parallel and collaboratively, letting us explore various configurations to maximizing TCO and power usage effectiveness. NVIDIA uses Cadence Reality Digital Twin, accelerated by CUDA and Omniverse libraries, to simulate air and liquid cooling systems. And Schneider Electric with ETAP, an application to simulate power block efficiency and reliability. Real-time simulation lets us iterate and run large-scale what-if scenarios in seconds versus hours. We use the digital twin to communicate instructions to the large body of teams and suppliers, reducing execution errors and accelerating time to bring up. And when planning for retrofits or upgrades, we can easily test and simulate cost and downtime, ensuring a future-proof AI factory.
This is the first time anybody who builds data centers says, oh, that's so beautiful. All right, I got a race here because turns out I got a lot to tell you. And so if I go a little too fast, it's not because I don't care about you, it's just I got a lot of information to go through. All right, so first, our roadmap. We're now in full production of Blackwell. Computer companies all over the world are ramping these incredible machines at scale. And I'm just so pleased and so grateful that all of you worked hard on transitioning into this new architecture. And now, in the second half of this year, we'll easily transition into the upgrade. So we have the Blackwell Ultra NVLink 72. It's 1.5 times more flops. It's got a new instruction for attention. It's 1.5 times more memory. All that memory is useful for things like KV cache. It's 2 times more bandwidth. Okay, for networking bandwidth. And so now that we have the same architecture, we'll just kind of gracefully glide into that, and that's called Blackwell Ultra. Okay, so that's coming second half of this year. Now, there's a reason why this is the only product announcement in any company where everybody's going, yeah, next. Yeah. And in fact, that's exactly the response I was hoping to get. And here's why. Look, we're building AI factories and AI infrastructure. It's going to take years of planning. This isn't like buying a laptop. This isn't discretionary spend. This is spend that we have to go plan on. And so we have to plan on having, of course, the land and the power, and we have to get our CapEx ready, and we get engineering teams, and we have to lay it out a couple, 2-3 years in advance, which is the reason why I show you our roadmap a couple, 2-3 years in advance, so that we don't surprise you in May. Hi, in another month we're going to go to this incredible new system. I'll show you an example in a second. And so we plan this out in multiple years. The next click, 1 year out, is named after an astronomer, and her grandkids are here. Her name is Vera Rubin. She discovered dark matter. Okay, yep. Vera Rubin is incredible because the CPU is new. It's twice the performance of Grace, and more memory, more bandwidth, and yet just a little tiny 50-watt CPU. It's really quite incredible. Okay, and Rubin, brand new GPU, CX9, brand new networking smart NIC, NVLink 6, brand new NVLink, brand new memories, HBM4. Basically, everything is brand new except for the chassis. And this way, we could take a whole lot of risk in one direction and not risk a whole bunch of other things related to the infrastructure. And so Vera Rubin, NVLink 144, is the second half of next year. Now, one of the things that I made a mistake on, and so I just need you to make this pivot. We're going to do this one time. Blackwell is really 2 GPUs in one Blackwell chip. We call that one chip a GPU, and that was wrong. And the reason for that is it screws up all the NVLink nomenclature and things like that. So going forward, without going back to Blackwell to fix it, going forward, when I say NVLink 144, it just means that it's connected to 144 GPUs. And each one of those GPUs is a GPU die, and it could be assembled in some package. How it's assembled could change from time to time, okay? And so each GPU die is a GPU. Each NVLink is connected to the GPU. And so Vera Rubin NVLink 144. And then this now sets the stage for the second half of the year, the following year, we call Rubin Ultra. Okay, so Vera Rubin Ultra. I know. This one is where you go. All All right, so this is Vera Rubin Ultra, second half of 27. It's NVLink 576, extreme scale up. Each rack is 600 kilowatts, 2.5 million parts, okay? And obviously a whole lot of GPUs. And everything is X factored more. So 14 times more flops, 15 exaflops. Instead of one exaflop, as I mentioned earlier, is now 15 exaflops, scaled up exaflops, okay? And it's 4.6 petabytes, so 4,600 terabytes per second scale up bandwidth. I don't mean aggregate, I mean scale up bandwidth. And of course, a brand new NVLink switch and CX9, okay? And so notice 16 sites, 4 GPUs in one package, extremely large NVLink. Now just put that in perspective. This is what it looks like, okay? Now this is going to be fun. So you are just literally ramping up Grace Blackwell at the moment, and I don't mean to make it look like a laptop, but here we go. Okay, so this is what Grace Blackwell looks like, and this is what Rubin looks like. ISO dimension. And so this is another way of saying, before you scale out, you have to scale up. Does that make sense? Before you scale out, you scale up. And then after that, you scale out with amazing technology that I'll show you in just a second. All right, so first you scale up, and then now that gives you a sense of the pace at which we're moving. This is the amount of scale up flops. This is scale up flops. Hopper is 1x, Blackwell is 68x, Rubin is 900x. Scale up flops. And then if I turn it into essentially your TCO, which is power on top, power per, and the underneath is the area underneath the curve that I was talking to you about, the square underneath the curve, which is basically flops times bandwidth. Okay? So the way you think about a very easy gut check on whether your AI factories are making progress is watts divided by those numbers. And you can see that Rubin is going to drive the cost down tremendously. Okay? So that's very quickly NVIDIA's roadmap. Once a year like clock ticks, once a year. Okay, how do we scale up? Well, we were preparing to scale out. That was scale up, was NVLink. Our scale out network is InfiniBand and Spectrum-X. Most were quite surprised that we came into the Ethernet world. And the reason why we decided to do Ethernet is if we could help Ethernet become like InfiniBand, have the qualities of InfiniBand, then the network itself would be a lot easier for everybody to use and manage. And so we decided to invest in Spectrum. We call it Spectrum-X, and we brought to it the properties of congestion control and very low latency and a mountain of software that's part of our computing fabric. And as a result, we made Spectrum-X incredibly high performant. We scaled up the largest single GPU cluster ever as one giant cluster with Spectrum-X, right? And that was Colossus. And so there are many other examples of it. Spectrum-X is unquestionably a huge home run for us. One of the areas that I'm very excited about is the largest enterprise networking company to take Spectrum-X and integrate it into their product line so that they could help the world's enterprises become AI companies. We're at 100,000 with CX7. Now CX8's coming, CX9's coming, and during Rubin's time frame, we would like to scale out the number of GPUs to many hundreds of thousands. Now, the challenge with scaling up GPUs to many hundreds of thousands is the connection of the scale out. The connection on scale up is copper. We should use copper as far as we can, and that's, call it a meter or two. And that's incredibly good connectivity, very high reliability, very good energy efficiency, very low cost. And so we use copper as much as we can on scale up, But on scale out, where the data centers are now the size of the stadium, we're going to need something much long distance running. And that's just where silicon photonics comes in. The challenge of silicon photonics has been that the transceivers consume a lot of energy. To go from electrical to photonic has to go through a SerDes, go through a transceiver and a SerDes, several SerDes. And so each one of these, am I alone? Is anybody? What happened to my my networking guys? What? Can I have this up here? Yeah, let's bring it up so I can show people what I'm talking about. Okay, so first of all, we're announcing Nvidia's first co-packaged option silicon photonic system. It is the world's first 1.6 terabit per second CPO. It is based on a technology called micro-ring resonator modulator, and it is completely built with this incredible process technology at TSMC that we've been working with for some time. And we partnered with just a giant ecosystem of technology providers to invent what I'm about to show you. This is really crazy technology. Crazy technology. Now, the reason why we decided to invest in MRM is so that we could prepare ourselves using MRM's incredible density and power, better density and power compared to Mach Zehnder, which is used for telecommunications when you drive from one data center to another data center in telecommunications, or even in the transceivers that we use Mach Zehnder, because the density requirement is not very high until now. And so if you look at these transceivers, this is an example of a transceiver. They did a very good job tangling this up for me. Oh, wow. Thank you. Oh, Mother of God. Okay, this is where you got to turn reasoning on. It's not as easy as you think. These are squirrely little things. All right, so this one right here, this is 30 watts. Just so keep you remember, this is 30 watts, and if you buy it in high volume, it's $1,000. This is a plug. On this side is electrical. On this side is optical. Okay, so optics come in through the yellow. You plug this into a switch. It's electrical on this side. There's transceivers, lasers, and it's a technology called Mach Zehnder, and incredible. And so we use this to go from the GPU to the switch to the next switch, and then the next switch down, and the next switch down to the GPU, for example. And so each one of these, if we had 100,000 GPUs, we would have 100,000 of this side, and then another, 100,000, which connects the switch to the switch, and then on the other side, I'll attribute that to the other NIC. If we had 250,000, we'll add another layer of switches, and so each GPU, every GPU, 250,000, every GPU would have 6 transceivers. Every GPU would have 6 of these plugs, and these 6 plugs would add 180 watts per GPU, 180 watts per GPU, and $6,000 per GPU, okay? And so the question is, how do we scale up now to millions of GPUs? Because if we had 1 million GPUs, multiplied by 6, right, it would be 6 million transceivers times 30 watts, 180 megawatts of transceivers. They didn't do any math, they just moved signals around. And so the question is, how could we afford, and as I mentioned earlier, energy is our most important commodity. Everything is related ultimately to energy. So this is going to limit our revenues, our customers' revenues, by subtracting out 180 megawatts of power. And so this is the amazing thing that we did. We invented the world's first MRM micromirror, and this is what it looks like. There's a little waveguide. You see that on that waveguide goes to a ring. That ring resonates, and it controls the amount of reflectivity of the waveguide as it goes around, and limits and modulates the energy, the amount of light that goes through. And it shuts it off by absorbing it or pass it on. Okay, it turns the light, this direct continuous laser beam, into ones and zeros. And that's the miracle. And that technology is then, that photonic IC is stacked with the electronic IC, which is then stacked with a whole bunch of micro lenses, which is stacked with this thing called fiber array. These things are all manufactured using this technology at TSMC called, they call it COUP, and packaged using a 3D CoWoS technology, working with all of these technology providers, a whole bunch of them, the names I just showed you earlier, and it turns it into this incredible machine. So let's take a look at the video of it. Just a technology marvel. And they turn into these switches. Our InfiniBand switch, the silicon is working fantastically. Second half of this year, we will ship the silicon photonics switch in the second half of this year. In the second half of next year, we'll ship the Spectrum X. Because of the MRM choice, because of the incredible technology risks that over the last 5 years that we did, and filed hundreds of patents, and we've licensed it to our partners so that we can all build them. Now, we're in a position to put silicon photonics with co-packaged options, no transceivers, fiber, direct fiber into our switches with a radix of 512. This is the 512 ports. This would just simply not be possible any other way. And so this now set us up to be able to scale up to these multi-100,000 GPUs and multi-million GPUs. And the benefit, just so you imagine this is incredible. In a data center, we could save tens of megawatts. Let's say 10 megawatts, well, let's say 60 megawatts, 6 megawatts is 10 Rubin Ultra racks. 6 megawatts is 10 Rubin Ultra racks, right? And 60, that's a lot. 100 Rubin Ultra racks of power that we can now deploy into Rubins. All right, so this is our roadmap. Once a year, an architecture every 2 years, a new product line every single year, X factors up, and we try to take silicon risk or networking risk or system chassis risk in pieces so that we can move the industry forward as we pursue these incredible technology. Vera Rubin, and I really appreciate the grandkids for being here. This is our opportunity to recognize her and to honor her for the incredible work that she did. Our next generation will be named after Feynman. Okay, NVIDIA's roadmap. Let me talk to you about enterprise computing. This is really important. In order for us to bring AI to the world's enterprise, first we have to go to a different part of NVIDIA. The beauty of Gaussian splats. Okay, in order for us to take AI to enterprise, take a step back for a second and remind yourself this. Remember, AI and machine learning has reinvented the entire computing stack. The processor is different, the operating system is different, the applications on top are different. The way the applications are different, the way you orchestrate it are different, and the way you run them are different. Let me give you one example. The way you access data will be fundamentally different than the past. Instead of retrieving precisely the data that you want and you read it to try to understand it, in the future, we will do what we do with Perplexity. Instead of doing retrieval that way, I'll just ask Perplexity what I want. Ask it a question, and it will tell you the answer. This is the way enterprise IT will work in the future as well. We'll have AI agents, which are part of our digital workforce. There's 1 billion knowledge workers in the world. There are probably going to be 10 billion digital workers working with us side by side. 100% of software engineers in the future, there are 30 million of them around the world, 100% of them are going to be AI assisted. I'm certain of that. 100% of NVIDIA software engineers will be AI assisted by the end of this year. And so AI agents will be everywhere. How they run, what enterprises run, and how we run it will be fundamentally different. And so we need a new line of computers. And this
Welcome to Market Domination. I'm Julie Hyman with Josh Lipton. We've been listening to NVIDIA CEO Jensen Huang making some key announcements at NVIDIA's annual GTC event. We learned about the company's new GM partnership, a new operating model, and an AI gigafactory as well. It looks like he's still speaking, but there was some technical difficulty. So in terms of what we heard from him, he talked about those new partnerships. He talked about the timeline for the chips here, because as he said, he wants to sort of give a roadmap to customers to know what to expect from the company.
Yeah, he talked, also just about what's in the market right now. That would be Blackwell. He talked about how that's in full production. Talked about in the second half of the year the transition to next-gen Blackwell, Blackwell Ultra. He talked about how that will be easy. Said there's no need to buy hoppers when Blackwell is available. Kind of joked about that. Said, he's calling himself the chief revenue destroyer, Julie. It's kind of CEO humor there. But I guess the point being, you can laugh about it if you believe, as Jensen clearly does, that demand for Blackwell is just that strong. Some other headlines I know folks are pointing to. He kind of, to get a step back, as you said, Julie, heading into this, Jensen also, he plays the role of visionary very well and kind of looking out. How does he see AI developing? He talked about AI for every industry. Yes, it's big cloud giants, but also enterprise IT and robotics and self-driving cars. And that point, NVIDIA says it's going to be working with GM on self-driving cars. Now, does that ultimately help GM kind of take on the Teslas and the Waymos? We'll talk about that more later in the show. He talked about the future of AI, how it will evolve, services that can reason. But a lot of this stuff also was kind of further out. So far, investors have been kind of underwhelmed, it looks like, at least the initial reaction. We're off the lows here, but we're still down about 2%. Yes,
still down on the day, because it doesn't look like there was anything that perhaps dramatically new for investors here. A lot of these products that Jensen talked about today are not ones that were not already sort of known about in the market, either ones that he sort of talked about before or had been sort of hinted at here. But nonetheless, the announcement about new partnerships tends to sort of help matters here. I did notice earlier Mobileye, which is another company that provides sort of self-driving assistance technology, that stock had been hit a little bit on the news that Nvidia was partnering more with, that GM was partnering with Nvidia. In other words, that Mobileye was not a partner in that particular arrangement. So, it's interesting to watch kind of the universe of these companies.
Yeah, Jensen, when he's on stage here, he's often, he's sort of CEO Jensen, he's visionary Jensen, he's also very kind of professorial Jensen,
Yes.
can be very academic. They're very technical sounding, right, for a lot of folks. And that makes sense because of his audience. He's talking to investors, but he's very much talking to developers as well. To your point, though, Julie, a lot of what we heard today was kind of well telegraphed, and so maybe that imparts what you're seeing in the stock right now.
Yes, perhaps so. So the company also, by the way, he talked about other partnerships with wireless companies. T-Mobile was mentioned, Cisco was mentioned. We're talking about, we just started adopting 5G, now we're talking about 6G. So it's very much, what is the next thing that is coming is the sort of consistent theme that we are getting from Nvidia.
I do wonder also, do you think in the backdrop here for investors, some of the same concerns that have been pressuring the stock, you can have these updates and you can have, obviously there's going to be a lot of work done, analysis done on the new chips and their efficiency and their performance. You still do have these kind of broader issues, which Jensen, of course, is, he's not going to go, this would not be a conference where you would expect him to go into, but all the stuff we talk about, the political backdrop of potential tariffs and export controls, that's still out there too.
Yes, it is. All right, I believe we have GTC back, so we're going to listen back into Jensen Huang.
Of the age of AI, this is what computers should look like, and this is what computers will run in the future. And we have a whole lineup for enterprise now, from little tiny one to workstation ones, the server ones, to supercomputer ones, and these will be available by all of our partners. We will also revolutionize the rest of the computing stack. Remember, computing has 3 pillars. There's computing, you're looking at it. There's networking, as I mentioned earlier, Spectrum X going to the world's enterprise, an AI network. And the third is storage. Storage has to be completely reinvented. Rather than a retrieval-based storage system, it's going to be a semantics-based retrieval system, a semantics-based storage system. And so the storage system has to be continuously embedding information in the background, taking raw data, embedding it into knowledge, and then later when you access it, you don't retrieve it, you just talk to it. You ask it questions, you give it problems. And one of the examples, I wish we had a video of it, but Aaron at Box even put one up in the cloud, worked with us to put it up in the cloud. And it's basically, a super smart storage system. And in the future, you're going to have something like that in every single enterprise. That is the enterprise storage of the future. And we're working with the entire storage industry, really fantastic partners, DDN and Dell and HP Enterprise and Hitachi and IBM and NetApp and Nutanix and Pure Storage and Vast and Weka. Basically, the entire world storage industry will be offering this stack. For the very first time, your storage system will be GPU accelerated. And so somebody thought I didn't have enough slides. And so Michael thought I didn't have enough slides. So he said, Jensen, just in case you don't have enough slides, can I just put this in there? And so this is Michael's slides. But he sent this to me. He goes, just in case you don't have any slides. And I got too many slides. But this is such a great slide. And let me tell you why. In one single slide, he's explaining that Dell is going to be offering a whole line of NVIDIA enterprise IT AI infrastructure systems and all the software that runs on top of it. Okay, so you can see that we're in the process of revolutionizing the world's enterprise. We're also announcing today this incredible model that everybody can run. And so I showed you earlier R1, a reasoning model. I showed you versus Llama 3, a non-reasoning model. And obviously R1 is much smarter. But we can do it even better than that. And we can make it possible to be enterprise ready for any company. And it's now completely open source. It's part of our system we call NIMS, and you can download it, you can run it anywhere, you can run it on DGX Spark, you can run it on DGX Station, you can run it on any of the servers that the OEMs make. You can run it in the cloud, you can integrate it into any of your agentic AI frameworks. And we're working with companies all over the world, and I'm going to flip through these, so watch very carefully. I've got some great partners in the audience. Want to recognize Accenture, Julie Sweet and her team are building their AI factory and their AI framework. Amdocs, the world's largest telecommunications software company. AT&T, John Stankey and his team building an AT&T AI system, agentic system. Larry Fink and BlackRock team building theirs. Anirudh, in the future, not only will we hire ASIC designers, we're going to hire a whole bunch of digital ASIC designers from Anirudh Cadence that will help us design our chips. And so Cadence is building their AI framework. And as you can see, in every single one of them, there's NVIDIA models, NVIDIA NIMs, NVIDIA libraries integrated throughout so that you can run it on-prem, in the cloud, any cloud. Capital One, one of the most advanced financial services companies in using technology, has NVIDIA all over it. Deloitte, Jason and his team, EY, Janet and his team, NASDAQ, and Adina and her team, integrating NVIDIA technology into their AI frameworks, and then Christian and his team at SAP, Bill McDermott and his team at ServiceNow. That was pretty good, huh? First, this is one of those keynotes where the first slide took 30 minutes, and then all the other slides took 30 minutes, all right? So next, let's go somewhere else. Let's go talk about robotics, shall we? Let's talk about robots. Well, the time has come for robots. Robots have the benefit of being able to interact with the physical world and do things that otherwise digital information cannot. We know very clearly that the world has severe shortage of human laborers, human workers. By the end of this decade, the world is going to be at least 50 million workers short. We'd be more than delighted to pay them each $50,000 to come to work. We're probably going to have to pay robots $50,000 a year to come to work. And so this is going to be a very, very large industry. There are all kinds of robotic systems. Your infrastructure will be robotic. Billions of cameras in warehouses and factories, 10, 20 million factories around the world. Every car is already a robot, as I mentioned earlier, and then now we're building general robots. Let me show you how we're doing that.
Everything that moves will be autonomous. Physical AI will embody robots of every kind, in every industry. 3 computers built by Nvidia enable a continuous loop of robot AI simulation, training, testing, and real-world experience. Training robots requires huge volumes of data. Internet-scale data provides common sense and reasoning, but robots need action and control data, which is expensive to capture. With blueprints built on NVIDIA Omniverse and Cosmos, developers can generate massive amounts of diverse synthetic data for training robot policies. First, in Omniverse, developers aggregate real-world sensor or demonstration data according to their different domains, robots, and tasks. Then use Omniverse to condition Cosmos, multiplying the original captures into large volumes of photoreal, diverse data. Developers use Isaac Lab to post-train the robot policies with the augmented dataset. And let the robots learn new skills by cloning behaviors through imitation learning, or through trial and error, with reinforcement learning AI feedback. Practicing in a lab is different than the real world. New policies need to be field tested. Developers use Omniverse for software and hardware in the loop testing, simulating the policies in a digital twin with real-world environmental dynamics, with domain randomization, physics feedback, and high-fidelity sensor simulation. Real-world operations require multiple robots to work together. Mega, an Omniverse blueprint, lets developers test fleets of post-trained policies at scale. Here, Foxconn tests heterogeneous robots in a virtual Nvidia Blackwell production facility. As the robot brains execute their missions, they perceive the results of their actions through sensor simulation, then plan their next action. Mega lets developers test many robot policies, enabling the robots to work as a system, whether for spatial reasoning, navigation, mobility, or dexterity. Amazing things are born in simulation. Today, we're introducing NVIDIA Isaac GR00T N1. GR00T N1 is a generalist foundation model for humanoid robots. It's built on the foundations of synthetic data generation and learning in simulation. GR00T N1 features a dual system architecture for thinking fast and slow, inspired by principles of human cognitive processing. The slow thinking system lets the robot perceive and reason about its environment and instructions, and plan the right actions to take. The fast thinking system translates the plan into precise and continuous robot actions. GR00T N1's generalization lets robots manipulate common objects with ease and execute multi-step sequences collaboratively. And with this entire pipeline of synthetic data generation and robot learning, humanoid robot developers can post-train GR00T N1 across multiple embodiments and tasks across many environments. Around the world, in every industry, developers are using NVIDIA's 3 computers to build the next generation of embodied AI.
Physical AI and robotics are moving so fast. Everybody pay attention to this space. This could very well likely be the largest industry of all. At its core, we have the same challenges. As I mentioned before, there are 3 that we focus on. They are rather systematic. 1, how do you solve the data problem? How, where do you create the data necessary to train the AI? 2, what's the model architecture? And then 3, what's the scaling laws? How can we scale either the data, the compute, or both, so that we can make AIs smarter and smarter and smarter? How do we scale? And those fundamental problems exist in robotics as well. In robotics, we created a system called Omniverse. It's our operating system for physical AIs. You've heard me talk about Omniverse for a long time. We added 2 technologies to it. Today I'm going to show you 2 things. One of them is so that we could scale AI with generative capabilities. A generative model that understands the physical world. We call it Cosmos. Using Omniverse to condition Cosmos, and using Cosmos to generate an infinite number of environments, allows us to create data that is grounded, controlled by us, and yet be systematically infinite at the same time. Okay, so you see Omniverse, we use candy colors to give you an example of us controlling the robot in the scenario perfectly, and yet Cosmos can create all these virtual environments. The second thing, just as we were talking about earlier, one of the incredible scaling capabilities of language models today is reinforcement learning, verifiable rewards. The question is, what's the verifiable rewards in robotics? And as we know very well, it's the laws of physics. Verifiable physics rewards. And so we need an incredible physics engine. Well, most physics engines have been designed for a variety of reasons. They could be designed because we want to use it for large machineries, or maybe we design it for virtual worlds, video games and such. But we need a physics engine that is designed for very fine-grained, rigid and soft bodies, designed for being able to train tactile feedback and fine motor skills and actuator controls. We needed to be GPU accelerated so that these virtual worlds could live in super linear time, super real time, and train these AI models incredibly fast. And we needed to be integrated harmoniously into a framework that is used by roboticists all over the world, Mujoko. And so today we're announcing something really, really special. It is a partnership of 3 companies, DeepMind, Disney Research, and Nvidia, and we call it Newton. Let's take a look at Newton. Thank you. All right, let's start that over, shall we? Let's not ruin it for them. Hang on a second. Somebody talk to me. I need feedback. What happened? I just need a human to talk to. Come on, that's a good joke. Give me a human to talk to. Janine, I know it's not your fault, but talk to me. We just got 2 minutes left.
I'm right here. They're re-racking it.
They're re-racking it? I don't even know what that means. Okay. Tell me that wasn't amazing. Hey, Blue. How are you doing? How do you like your new physics engine? You like it, huh? Yeah, I bet. I know. Tactile feedback, rigid body, soft body simulation, super real time. Can you imagine just now what you were looking at is complete real time simulation? This is how we're going to train robots in the future. Just so you know, Blue has 2 computers, 2 Nvidia computers inside. Look how smart you are. Yes, you're smart. Okay. All right. Hey, Blue, listen. How about let's take them home? Let's finish this keynote. It's lunchtime. Are you ready? Let's finish it up. We have another announcement. You're good. You're good. Just stand right here. Stand right here. Stand right here. All right, good. Right there. That's good. All right, stand. Okay, we have another amazing news. I told you the progress of our robotics has been making enormous progress. And today we're announcing that Groot N1 is open sourced. I want to thank all of you to come let's wrap up. I want to thank all of you for coming to GTC. We talked about several things. One, Blackwell is in full production, and the ramp is incredible. Customer demand is incredible, and for good reason, because there's an inflection point in AI. The amount of computation we have to do in AI is so much greater as a result of reasoning AI and the training of reasoning AI systems and agentic systems. Second, Blackwell NVLink 72 with Dynamo is 40 times the performance, AI factory performance of Hopper. And inference is going to be one of the most important workloads in the next decade as we scale out AI. Third, we have an annual rhythm of roadmaps that has been laid out for you so that you could plan your AI infrastructure. And then we have three AI infrastructures we're building. AI infrastructure for the cloud, AI infrastructure for enterprise, and AI infrastructure for robots. We have one more treat for you. Play it. Thank you, everybody. Thank you for all the partners that made this video possible. Thank you, everybody that made this video possible. Have a great GTC. Thank you. Hey, Blue.
Welcome to Market Domination. I'm Julie Hyman, that's Josh Lipton, and we were just listening to NVIDIA CEO Jensen Huang making some announcements at NVIDIA's annual GTC event, most recently showing off a robot there on stage. Joining us now is Kodiak Akre, a Benchmark Company Managing Director and Senior Semiconductor Research Analyst. Cody, obviously you were watching as well. Any big takeaways here? It was sort of fleshing out some of the bones of which we were aware of already, right?
I think that's really been more of the nuts and bolts of the keynote, was really just a bit more details around what we knew was already in the works. Ultra and Rubin and now Feynman in 28. That was incremental. We have not heard much about that in the past. But for the most part, it was a lot of incremental details that were relatively small.
Cody, I remember when Nvidia last reported financial results, and we had, other smart financial analysts on, like yourself, your colleagues on the street, and I asked them, hey, okay, what is the next big catalyst for the stock? And some of them, Cody, told us it was GTC, but I look right now, the stock's down about, nearly 2.5%. Was there something, Cody, investors were hoping for that they didn't hear today?
That we're just hoping for more, maybe more details, maybe something about an acceleration of Rubin. But with Rubin, it looks like it's not coming until the second half of 26 now. That maybe the street had been more optimistic about its launch, but I think the realism is that Blackwell Ultra is going to carry the water here for the next 12 months, and then we'll be looking at Rubin beyond that. But it is obviously a bit of a disappointment from street expectations with the stock being off today.
Cody, I can't help but think of a parallel perhaps with Apple, right? Another company, obviously more consumer facing, but another company that has annual conferences where it rolls out new product, but maybe a little bit of diminishing returns after a while. In other words, obviously it was a huge leap when Nvidia first came out with Blackwell. Is it inevitably not going to be able to match the magnitude of that leap on a regular basis?
Yeah, Julia, I think you're right. I think that once we have the basic schematics or the basic roadmap down, that gets factored into the stock very quickly. And unfortunately, the AI trade has been soft for the better part of this year, really since DeepSeek started to take the wind out of the AI trade a couple months ago, and that has we've been looking for a reason to get back involved, and the hope had been that GTC would be that reason. But I think that was an overestimation of what Nvidia was going to say. I really was not surprised that we didn't hear more specifics or more encouraging stock catalyst out of this. I don't think that's what this format was for.
So, Cody, with the stock down now 13% year to date, what gets it moving again in the right direction?
Well, it's just going to be earnings, and I think Nvidia goes back to a block and tackle story that they continue to deliver upside. They continue to guide higher. They continue to grow into the transition, which was delayed from Blackwell as they get into Blackwell Ultra, and that starts to get them more momentum to their earnings base, and that's what investors are ultimately paying for. And so I think we just go back to a beat and raise story around earnings.
Well, and that remains the story, right? To be clear, do you think that there is any demand slowdown, threat of a demand slowdown, any kind of issue there with what's actually happening with the existing product?
No, I don't think there is. I think if anything, things are accelerating. I think you're seeing that in the CapEx budgets of the cloud service providers. Those are only increasing, and we are seeing the compute density as we're moving to more reasoning models. And even DeepSeek showed that reasoning models with more compute perform better. And so the air that was taken out of the AI trade around DeepSeek was, I think, over exaggerated and inflammatory, largely based on the trend of reasoning that just drives compute density higher. And I think that has been just misunderstood by the industry, is that as we move to these higher reasoning models, that they are going to consume whatever compute NVIDIA is able to provide.
Cody, you mentioned a point there I just want to come back to, because in the hyperscalers specifically, because I think for a lot of NVIDIA investors, Cody, they kind of keep it simple. They just think as long as the hyperscalers, as long as the big cloud giants, keep spending to build out their AI infrastructure, hey, that's good news for NVIDIA, that's more GPUs. How confident are you, though, Cody, that you're going to keep seeing this really eye-popping CapEx growth in not just this year, Cody, but 2026, 2027?
Oh, I don't think, Josh, there's any reason to doubt that we will need more compute horsepower in the future than we have today. That AI is becoming pervasive throughout all industries, whether it's industrial, automotive, pharmaceutical, mining, any kind of delivery logistics. We're seeing it become pervasive throughout multiple verticals, and the more they use it, the more they need to rely on the cloud service providers for infrastructure. And so you're seeing companies like Oracle come on as a major supplier of resources. That's relatively recent development, but it's come on as we've seen enterprises adopt AI and need those resources on an outsourced basis. And so I think that the cloud service providers will continue to spend to capitalize on that trend, which I don't see any reason that it stops unless the implementation of AI stops. And there's no reason that slows as long as productivity increases are available.
So would it stop or slow if indeed some of the worst concerns about the economy right now come to pass? In other words, as you know, of course, there's a lot of concerns about tariffs, about the effect on the economy. We've seen some hits to consumer confidence. Do you have any concerns that that is going to affect the future pace of AI spending?
I do, Julie. I think the pace of spending is going to be very economically sensitive, and there is big concerns in my mind and at our firm of a slowdown in our GDP trends and the global impact the tariffs are likely to have. And that is going to be a direct correlation to enterprise willingness to spend. That has to impact, there has to be a certain sensitivity to economic direction. And I think that is the biggest risk to AI. I don't think it changes the long-term adoption. I think it simply causes a pause as corporations start to try to figure out what the next permutation of our economy is going to look like. And if that is slower, then spending will slow.
Cody, appreciate that instant analysis and reaction. Thank you for joining us.
Sure. Thanks, Jeff.
NVIDIA CEO Jensen Huang announcing a new partnership with General Motors earlier today at NVIDIA's GTC event.
And so today, I'm super excited to announce that GM has selected NVIDIA to partner with them to build their future self-driving car fleet.
Now, for more, we're bringing in Yahoo Finance senior autos reporter Praz Subramanian. Praz.
Yeah, kind of another big kind of OEM notch for Jensen Huang and Nvidia with GM now partnering with them to not only partner with them to not only develop their self-driving cars, also for factory optimization, simulation types of activities with AI and also enterprise. So kind of a bigger deal than just the cars itself. But like I said, another big win for Nvidia here. They have Toyota, they have Mercedes, they have a bunch of others OEM partners that are signing up for their business. And it's a small business, right? It's around $2 billion last year, but they say it'll be $5 billion, the auto business for NVIDIA. So it's a growing subset, not obviously tiny compared to their the Blackwell business, but also something that's really exciting from the automotive point of view is what NVIDIA can do to power those initiatives for those cars.
Yeah, and some of the other chip makers also have been really getting, Qualcomm it comes to mind, for example, because those are rapidly growing parts of the business as well. So it makes sense that they would kind of try and push in that direction. On a day when we are focused on self-driving and some of the innovations within the driving space, we also have to talk about another big innovation that was announced by a competitor of Tesla. We're talking about BYD in China, introducing what it says is super fast charging.
Right. So they hit this amazing milestone of 1,000 kilowatts into a battery, which would charge your battery in 5 minutes from like 0 to full, which is quite amazing, which is basically almost the amount of time it takes to pump a gas tank full of gas. So that's a big milestone. You know, Tesla's at 250 kilowatts, so about a quarter of that. So that's a jump we're seeing. I mean, kind of remarkable that we're seeing that now in this day and age with BYD. And you mentioned BYD also. Just going back to self-driving, they actually have their God's Eye system that came out a few weeks ago. They're rolling out to customers in their cheapest cars. So that's a big sort of hit for Tesla. But there's a couple other things I want to note in China here that might impact Tesla's businesses. You have Xiaomi, the device maker with that really popular sleek SU7 sedan. They're upping production from 300,000 to 350,000 this year, EVs this year, which is big because they can't actually meet demand right now in China. Finally, and also Zeekr. They're also in the self-driving space, releasing a free program, a pilot program for their buyers to use their self-driving software. Tesla just yesterday announced that 1 month trial. This one might be a little bit longer, we're not sure, but just sort of on the heels of what Tesla's doing. All these competitors, cheaper cars, better technology perhaps, interesting designs, all happening right now in China.
All right, Praz, thanks for the update. Appreciate it. Nvidia has dominated the AI chip sector over the past 2 years, spearheading innovation with its next-generation AI chip, Blackwell. The company seemed unstoppable until Chinese-based AI software firm DeepSeek replicated an open AI model using older microchips, triggering a sharp drop in Nvidia's stock price and market share. Since then, Nvidia has stabilized and is set to release its highly anticipated Q4 earnings today. We're going to find out how the company performed next.
You're seeing markets being absolutely eviscerated on news from a company most people have never even heard of. It's not deep fake, it's DeepSeek. So the fears on the street is that a lot of this AI spending will be dialed back. That will, of course, impact or potentially impact the likes of Nvidia.
Nobody in their right mind thinks Nvidia is a monopoly. There's tons of competition, but all the earnings multiple estimates are based on them never having competition.
Now, I would say, I wouldn't want to be Jensen necessarily because, other people are working on the same things. But, so far, he has stayed way ahead.
Welcome to our special coverage of NVIDIA's fourth quarter earnings. Let's get right to the numbers. It's 4:20 now here in New York. And there we go. We got the numbers here. So let me run through them. Adjusted earnings per share, 89 cents. That is above the 84 cents that was estimated. No surprise there. Gross margin, adjusted gross margin at 73.5%. In line with estimates here. Revenue, $39.3 billion. That's above the $38.25 billion that was estimated here. And that breaks down to $35.6 billion in data center, above estimates. Gaming revenue of $2.5 billion, which is below estimates here. Looking at some of the first quarter numbers here, we have $43 billion is the company's forecast for first quarter revenue, plus or minus 2%. The estimate was for $42.3 billion here, so giving them some room. And in the statement talking about the demand for Blackwell is amazing. That is something that we have heard from them before. And there is now ramped up massive scale production of Blackwell AI that the company has successfully ramped up that production. That is what we have been looking for. Here's something, though, that we should highlight for you. The first quarter adjusted gross margin forecast from the company, 70.5% to 71.5%. Analysts on average had been looking for 72.1%. So of what I am seeing here, that's the first thing that I'm seeing where there might be a little scope for disappointment. The share's kind of bouncing around here as investors try to figure out what to make of it. But before we figure out what to make of it, we're going to find out what Josh and Saz make of it here.
The margins are really interesting because for Q4, they hit the bogey the street was looking for, it sounds like. I was listening to a longtime tech analyst, Gene Munster, who was talking about the margins. He said, listen, they got to hit 73. That was the mark they had to hit, and they did hit that. The forecast in terms of what they're looking on ahead, though, I think is also interesting. That's going to come up on the call immediately. What are the puts and takes that go into that, Joe?
Immediately, my head is thinking right now, earnings call by Jensen, I think he's going to look to eviscerate the bears. He's got a revenue beat at his hands. He's got an earnings beat. He's got what looks to be better than expected first quarter revenue guidance. These are very powerful things. So I'm expecting Jensen to get on this call very, very bullish. I think this margin guide down or disappointing margin that you called out, Julie, which was right on the mark, is expected. I think the street was looking for a squishy, little bit of a disappointing margin out for the first quarter as Blackwell starts to ramp up. This quarter, by and large, looks good. Right now, I'm thinking bullish earnings call from Nvidia. I'm also now starting to think about a lot of these trades, AI trades, tomorrow morning that could get us some tailwinds if Jensen nails his earnings call like I'm thinking.
Well, right now the stock is down 4%. So I don't know. He may want to eviscerate the bears. It doesn't mean he's.
Well, I think it's the margin. I think it's the margin. I think it's the margin,
Yeah.
Julie. I think that's very important. I mean, I would argue the street really expected this. Keep in mind, you've had Nvidia shares underperform the S&P 500 by 7% the last month. So the street expected, I think, some weakness in that first quarter guidance. What I would say they didn't expect is that revenue beat. And that's a good revenue beat and
Of course they expected the revenue beat. Come
look,
on.
the stock has been underperforming into this quarter. They were concerned if they were concerned about an inline quarter, top and bottom line, also concerned about that first quarter
If you didn't get a revenue beat, the stock would be down a lot more. I mean, if Nvidia doesn't beat on revenue, like the sun is not shining, the sun is gone
Look
dark.
at the other side of this.
Like,
Look what we're seeing from Salesforce tonight. I mean, they whiffed completely. I mean, the stock's getting hammered.
Comments from Jensen Huang, by the way, I just want to bring in here. Demand for Blackwell is amazing, he says, as reasoning AI adds another scaling law. Going on to say increasing compute for training makes models smarter, and increasing compute for long thinking makes the answer smarter.
I want to bring Corey Johnson back into this to get his first blush reaction here. What do you think about this margin forecast?
So this is what I said earlier, right? If they keep margins too high, their customers are going to be mad, and these customers are going to remember it, and they're going to design around it. So Amazon might come out and say, "Yeah, we love Nvidia. We're always going to be together. We're couples forever." Yeah, sure. I mean, this is like the latest partner of whatever celebrity you want to name. It lasts until it doesn't, and I think that by taking a little bit of gross margin off, given they're not completely ripping off their customers, I think that actually builds for longer term partnerships. Also in this press release, you guys didn't get to it is Nvidia saying that they're going to be part of this big Stargate project, also going with the $500 billion that I think a lot of us have made fun of, because none of these companies, SoftBank, Oracle, OpenAI, have $500 billion, even $100 billion to put towards this project. But Nvidia is saying they're going to be part of that, which is interesting because we know that AMD is already part of it. We've seen some engineers at AMD tweet out saying that they're going to be involved in Stargate, and we know that Oracle's got a long-term partnership with both Nvidia and Stargate. So this may be the biggest project in building data centers out there if these numbers, if even a fraction of the numbers are to be believed. That Nvidia will be a part of that suggests that they'll both be part of future training and future inference. And I think that that's a positive sign for Nvidia here. But the stock bouncing around and not being off to the races like we might have seen in a quarter announced, 18 months ago, I think represents kind of the law of large numbers here. It just cannot continue to double and triple revenues quarter after quarter after quarter because they are reaching the limits of possibility here.
Corey, what do you think at the end of the day, what do you think the market may cue or zero in more? That margin, that soft margin outlook, or when you hear Jensen Huang say demand is amazing?
70% margins is not a soft margin outlook. It's softer than what these guys have had before. But when we look at, the once king of Intel doing single percentage margins, and that's the operating margins, and that's the best they've had in years. These are fantastic margins. This is fantastic growth. This is a fantastic quarter from a company that is performing fantastically. But I think this really is about the limits of the growth. As far as what the market's going to take away from this, who knows? The market in the short term we know is a voting machine. But I think that over the long term, what we see is that this company, Nvidia, remains the central most important player in all things AI, more than any other company. I want to make another note too, and I haven't put this into my model yet, but we've seen, while China and export controls into China have restricted Nvidia's growth there, and I think we might imagine that's going to get worse for Nvidia and maybe better for the world if China cannot have AI to target weapon systems and do the other nefarious things that they've been accused of. But we have seen really strong growth in Singapore. And some of that surely is compute moving throughout Asia from China to Singapore. But there are concerns that some way China might be using some Singapore compute and growth in Singapore to get around export controls. And I think it's something worth keeping an eye on. Singapore was less than single digits. My goodness, 3 years ago, Nvidia didn't report Singapore as an end customer, which means it was below 5%. Now it's well above that, and I think it's something to keep an eye on.
Corey, thank you so much for your perspective. You're going to stick around. We're going to hear more from you later. And Saz is going to stick around too. Joining us now with a closer look at Nvidia's fourth quarter results, we've got Benchmark Company Managing Director and Senior Semiconductor Research Analyst, Cody Acree. Cody, so just give us sort of your first blush, top line, big picture reaction to these Nvidia numbers.
Well, Julie, I thought it was a strong number really across the board. I think the gross margins coming in at 73.5% is key. I think that was a level threshold that they had to hit to keep investors even modestly happy. The guidance for gross margins at 71% is a little concerning. I think that's indicative of more pricing pressure, more competition from AMD, and more price sensitivity at their customers as they're investing their own dollars to create their own ASICs. And so I think that's just the future that NVIDIA has to live in. But demand for their products looks to be extremely strong, and that's really going to be the key for NVIDIA going forward.
Cody, I'm curious, conference calls coming up. If you had the chance to ask Jensen Huang a question or two, what would be top of mind off this print?
It's what is the investor appetite for diversity around both their internal ASICs as well as the competition's AI products from AMD and others. I think that is going to be key for investors going forward. That is obviously going to be key to their gross margins and the long-term spending split at their customers.
Cody, this first quarter guide for gross margins, rightly in focus. Do you think this is the low point for NVIDIA's fiscal year and these margins ramp up from here?
I think it is. I think Blackwell comes in with higher margin contribution, and Blackwell's really just getting started, and then we head into Rubin next year. And so I think that NVIDIA has better margins ahead, and that their software-based, their CUDA-based platform is a key enabler of all of that, and that with their networking emphasis continues to drive margins higher.
The company also, just going through some of the CFO commentary from Colette Kress here, talking about that $11 billion of Blackwell architecture revenue in the fourth quarter. They call that the fastest product ramp in the company's history. And Cody, the consistent message from NVIDIA ever since they introduced Blackwell is that they would be making even more of it if only they could make it fast enough. So when do they get to that full capacity, and what is that going to mean for revenue?
I think full capacity is always a moving target, as the industry has shown. We've got Meta, Microsoft, Google, and Amazon that have continually increased their CapEx budgets for 25 and are expecting even higher numbers for 26. And so I think that's a moving target. TSMC is ramping their leading edge capacity as fast as possible, and NVIDIA is absorbing the majority of that globally. And so I think that, again, that's going to be a moving target, and NVIDIA with their leading edge is just going to be chasing that demand curve.
Cody, fresh trade tensions now between U.S. and China. What does that mean for NVIDIA looking ahead?
It's unfortunate that NVIDIA gets the leading impact of this trade tension, but it just marks and highlights their leadership in the industry and how important they are to the AI movement. I think that this will haircut some of NVIDIA's opportunity in China, but they have shown that demand globally for their products is exceeding their own capacity to supply. And so I don't think that it impacts the numbers materially on a global basis, because there is more demand than there is availability.
Cody, appreciate that instant analysis, sir, and our thanks to, of course, Brian Saz as well. Thank you, guys. Appreciate it.
Sure.
Stick around. More of Yahoo Finance's special coverage of NVIDIA's earnings coming right up.
Well, Nvidia has delivered yet another strong quarter. Much of its success depends on just a handful of companies. Last February, Nvidia said a single customer had accounted for 19% of its total revenue in fiscal 2024. Joining us now is Ali Mogharabi, West End Capital Management Senior Equity Analyst. Good to see you. And we're learning in this past cycle that the company got 50% of its data center revenue from large cloud service providers, the so-called hyperscalers. Ali, where are we? You know, we know all the big amounts that those companies have pledged to build out their data centers. Where are we in that sort of spending cycle?
Well, it depends, right? In terms of the overall spending cycle, I think we're still far from the peak. But in terms of Nvidia, I mean, there might be some questions because some of these hyperscalers have invested heavily in their own chips. However, you know, based on the Q4 numbers and also on the guidance, it seems like the demand for Blackwell, their latest one, is very, very strong. And one can only assume that actually is coming from the hyperscalers. So I think for the time being, the hyperscalers continue to look to purchase the Nvidia GPUs.
You know, looking farther out, Ali, sometimes we ask these analysts who cover the stock, what's the competitive risk to Jensen Huang's company? They don't mention AMD, they don't mention Intel. It's interesting they'll mention Jensen Huang's own customers, those hyperscalers, as a potential competitive threat down the road. Is that how you see it?
That's how we're seeing it, especially with two of the hyperscalers, the Alphabet, the Google Cloud, and also Amazon, so AWS. They have actually been utilizing their own chips, their in-house chips, for a long time, especially Google. So and it also depends in terms of how much they can convince their clients, and I'm talking about the cloud players, those hyperscalers, how much they can convince their clients to go along with the in-house chips rather than the Nvidia chips. So that remains to be seen, and that's one of the main questions that we're still trying to answer. But again, based on the guidance that these guys provided, their fiscal Q1 guidance, it looks like that demand for Blackwell, for the Nvidia GPUs remains very, very strong.
You know, and we've been talking a lot also about the switch, the transition from training to inference in this AI cycle, right? First, the AI, for those who aren't familiar, first it learns, right? And then it uses what it has learned to infer, to basically come up with answers to prompts that you give it, et cetera. The common view being, well, maybe not the common view, the view among some that you don't need all of that power in a Blackwell chip for something like inference. Where are you on that whole question?
I think you still do. However, at the same time, I do think that demand for more customized chips could actually increase. But you still need all of that computing power for a few reasons, right? One is that it's actually a flywheel. So as more inference, more data is generated, and then the training continues. And then the other one is that as inference continues to improve, the application of all of this AI technology widens. So that means it's going to be available and utilized by more companies on various different apps in various sectors and so forth. So all of that requires more power. It requires more chips. That's the way we're looking.
I want to get your take, too, on this back and forth, speaking of hyperscalers, that we saw about Microsoft. Ali, we had an analyst say they're canceling leases with, private data center operators. That got folks worried, of course, about AI infrastructure growth looking ahead. Microsoft seemed to push back on that. Any thoughts, line of sight there, Ali?
There have been some reports. It's still a little bit unclear, but there have been some reports that some of the cancellations, some of the lease cancellations, may be due to OpenAI looking to utilize some other platforms rather than Microsoft. So the way we're looking at it is that yes, there may be. Again, it remains to be seen, but there may be some changes in terms of how Microsoft approaches it. But in terms of the overall demand for chips, and let's include, of course, Nvidia market-leading GPUs, that remains pretty strong. That hasn't necessarily changed.
Ali, what would you want to know on the call here, like in terms of sort of the implications for the broader universe?
Yeah, it's interesting. The first thing that came to mind, of course, is DeepSeek. We want clarification on that. We want to make sure, of course, that Nvidia clarifies, what the cost may have been, right? We certainly disagree. I mean, we don't think it was merely 6 million compared to the billions that some of the other, the hyperscalers have spent. So that's one regarding DeepSeek. And then the other one is, while it was good news, high demand for the H20s. I think there was an article published a couple of days ago. That's really good news. But we want to also make sure that the high demand for H20s is not necessarily cannibalizing the potential demand and ongoing demand for Blackwells. Of course, the numbers that they released today and the guidance that they gave doesn't really indicate that, but it'd be great for the management team to actually confirm that.
Ali, sometimes you'll hear an argument from NVIDIA bulls, and they'll say, listen, as long as the hyperscalers, as long as those big cloud giants are spending, and we, listen, you saw that during this earnings season, Ali, you saw the reports, you listened to conference calls, they sure are. Then they say you stick with NVIDIA. In your opinion, is it that simple?
It's becoming a little bit more complicated. I will say, though, that NVIDIA will still be the beneficiary for some time, but it is still becoming a little bit more complicated, mainly because of the in-house chips that they have and some of the other customized chips that others are working on. But again, with NVIDIA's market share currently, and I keep saying the guidance, the top line guidance that they provided, it looks like demand remains very, very strong.
Ali, great to have you. Thanks so much, as always, for your time and insight. Appreciate it.
Not a problem.
Coming up, we've got the numbers now. Let's hear from NVIDIA. We're going to bring you the earnings call. It's on the other side of the break. Stick around. More of Yahoo Finance's special coverage of NVIDIA earnings. That's coming right up. Time now to check in on the chip market reaction following NVIDIA's fourth quarter results. Yahoo Finance's Jared Blickery joins us now with the very latest. Jared.
Thank you, Josh. Somewhat of a muted reaction. You're going to see results here down 41 basis points. That's 0.4% since the close today. And you can see NVIDIA stock was up 3.67% only today. I'm going to show you a 3-day chart. So this is what happened this week. And I'm going to draw in here by hand where we saw the after hours high and low. Up by 136 was about the high and 128 was the low. So pretty muted when you consider the price action of this week. And if you recall my hit from just about 30 minutes ago, we were looking at a move of potentially 10%. At least that's what the options market was pricing into it. And of course, we have all day tomorrow as well. That 10% measures everything into the close the following day. So that is the 27th, Thursday. I'll just show you the year-to-date price action and kind of talk about what NVIDIA has done historically. This is a very much sideways chart. And even over the last year, we haven't seen the meteoric rises that we are accustomed to seeing with NVIDIA over this 2.5-year bull market. So things have slowed a bit. And let me just show you the last 3 years. And you can see some of these big run-ups that we've had before and really just kind of stalling out over the last 3/4 of a year. And so what does the future hold here? Difficult to say, but nevertheless, we have a pretty big trading range, and you got to think that we'll be testing at least one end of it within the next few days. Julie?
Jared, thank you. For more on the NVIDIA results and how the latest earnings from the company are expected to affect markets, let's welcome in Brian Colello, Morningstar equity strategist. The stock is not doing a heck of a lot at the moment, Brian. We've kind of seen it bouncing around a little bit as investors await the call. What do you think this sort of indecision is reflective of? What does the market need to know that it doesn't have certainty on here?
Yeah, that's a great question. And to the prior point about some of those exponential moves, that was very much during a time, let's say 12, 15, 18 months ago, where we didn't understand how much hyperscalers were going to spend on AI. So I'd like to think that the street and investors have sort of caught up on sort of the exponential boom. And so that way there hasn't been a ton of movement in the stock price, because I think we at least understand the near term that NVIDIA Blackwell product is very popular. They're going to sell everything they can, and hyperscalers are going to spend this year. So I think that's pretty much been priced in the near term.
Brian, on the Q1 gross margin guide here, they're calling for between 70.5 and 71.5%. Consensus, Brian, was close to around 72.1%. So that does undershoot. I'm curious what you make of that. And more importantly, Brian, I'm just curious what do you see as the trajectory of margins for NVIDIA?
Yeah, that's my biggest concern and my biggest question going into the call as well, that it's only at 71%. I was even higher than that consensus piece. It does speak, we think, that the Blackwell products are expensive, that they're going to sell quite a lot of them, and it's high, obviously the highest performing product, but whether it's cost at Taiwan Semi or cost to assemble, they're going to be a little more costly for NVIDIA, and they can't pass that full price on to customers. So we do think that's an issue in the near term. And I think they've signaled too that really as Blackwell ramps, it's not going to be as profitable on the margin front, on the gross margin front as Hopper. Hopper is probably peak margin for NVIDIA in our view on the gross margin line, because you had just the boom with a relatively more mature technology. Looking forward, low 70s are still a great gross margin for NVIDIA. If they're able to maintain that long term, I think the business will be just fine. But yeah, I think you'll have some ups and downs. And at the start of a new ramp, like something like Blackwell, you're going to see a little bit margin deterioration.
That's really interesting, Brian, because we've been talking about that whole margin question. There's also the question about the DeepSeek impact, because the thinking is that they'll be selling more chips to DeepSeek, right, and to those who are deploying DeepSeek in China. But that also, I imagine that product has a little bit different of a margin profile.
It could. It hasn't been noticeable whether it's been it hasn't had significant margin deterioration as they switch from the H100 to the H800 to the H20, and to the extent they sell more, yes, those will be lower priced chips, but it's still hard to imagine that NVIDIA doesn't retain the pricing power to pass them along. I think still the larger picture is that we are in this AI race, and companies will spend what they need to build the best products. So even as we think about DeepSeek and that sell-off a few weeks ago, the main concern at that time was that we're going to get slimmer models and fewer large build-outs. And if you listen to the hyperscalers, that slowdown isn't happening yet. They're going to take the best of DeepSeek, apply it to their own models, and continue to throw massive GPU clusters at it. And NVIDIA's results in the near term don't really show that slowing down either, and neither do the CapEx plans for the cloud companies in 2025.
Brian, I'm curious too, U.S. export controls. What's the possible ramifications, the impact, Brian, for NVIDIA?
It doesn't look like much based on this revenue. I mean, we'll be interested in hearing more on the call. I suppose, if we were trying to make a bet on, guidance and whether it'd be down significantly or not, you wonder if there would have been a dent in sovereign AI spending with the sovereign governments based on controls. I would say medium to long term, we're not expecting a lot of revenue for NVIDIA from China. Now, maybe they continue to sell H20s and equivalents going forward, and it's a piece of the pie. But to us, the build out the future of AI, there's a lot of potential risks and rewards over the next couple of years for NVIDIA. China is not something we're counting on as far as a big bounce back, as far as a repeal of any regulations or anything like that. We think of NVIDIA very much as a U.S. story, and to the extent they sell anything from China, that's good news in the near term. And the sovereign governments that may not be allowed to sell into them. I still think of it more as a hyperscaler story.
And Brian, you've got a $130 fair value estimate for the stock. That's right around where it is right now. Why don't you think that there is more upside in the short term?
Yeah, so I would say there's upside in the short term based on the high CapEx spending of the hyperscalers and NVIDIA's supply constraint and selling everything they can for 2025. And then I'm also quite bullish on AI as a technology at large. So those are very much the rewards for any NVIDIA investor, and nothing I just said is a surprise in any way. But the risks, as we saw, whether it was the DeepSeek sell-off, the use of custom in-house chips, whether this spending will continue, at what point do the hyperscalers optimize spending? If you think medium to long term, what's the growth trajectory look like? And so at 130, again, going into the call, we'll update our numbers later, but at a 130 fair value estimate, we think that balances the potential high rewards of AI, but also the potential risks of slower CapEx spending, growth not coming to fruition, more use of in-house chips. I mean, the way we think about the hyperscalers is they are completely reliant on NVIDIA today, and they have all the incentive in the world to not be reliant on them in the future. And we'll see when that crosses over. But that's why I guess I'm relatively cautious on valuation at this point.
Brian, great to have you on the show today. Thanks so much for joining us.
Thank you.
Coming up, we've got the numbers. Now let's hear from Nvidia. We're going to bring you the earnings call on the other side of the break. Stick around. More of Yahoo Finance's special coverage of Nvidia's earnings. That's coming right up.
Nvidia reporting fourth quarter earnings moments ago. Now all eyes and ears focused on the earnings call. Joining us again, Yahoo Finance tech editor Dan Howley. So what do we know? What do we want to know from the call, Dan?
Yeah, Julie, I think what we want to hear is more about Blackwell. Obviously, in the CFO commentary, Colette Crescent said that it was the largest or fastest ramp in history for their different AI cards. Obviously, Hopper was the prior generation, and they saw the explosion happen around there of the kind of AI boom. But this is the first card that's really gone out, or technology that's gone out in the midst of it. So it makes sense that would happen. But we want to know more about where that they see that going in the coming quarters, where they see it going in the back half of 2025. Obviously, there was a lot of questions as to what that looks like in the first few quarters of 2025. We got their guidance, so obviously that came in ahead of expectations. Now, what does that mean going forward past that? I think that's one of the things we're going to look for. Jensen Huang had kind of alluded to the DeepSeek drama, whether the fact that DeepSeek was able to train on NVIDIA's H20s rather than Blackwell cards and get good results out of their own AI models versus US firms that have AI models but used the high-end NVIDIA chips. And he had basically said in a statement, more or less, that the more compute that companies have, meaning the higher-end cards they have, the better long-thinking AI models respond, and that's essentially what DeepSeek does, is it uses long thinking. So that's something that he has kind of hit on since the whole kind of DeepSeek explosion happened at the beginning of, I believe it was, or in December. And so that's him kind of, I think, just referring to that. This is their first call since that happened. And so, we saw other tech companies say this is a good thing. This is NVIDIA saying that as well, just not as specifically. Hopefully we get more of that on the call. And then, honestly, any kind of commentary we can get with regards to export controls or tariffs, I think those are going to be very hot topics that analysts are going to want to know about.
All right, thank you, Dan. We'll check in again soon, my friend. Now let's bring in Corey Johnson for his thoughts ahead of the call. Corey, my friend, I'm looking at the stock after hours. We've bounced around here. Now we're up about more than 2%. On this call, Corey, let's say you had the chance to ask Jensen Huang a question or two. What would be top of mind for you?
Not the leather jacket. I can't ask about when that started. I think that what's really interesting here is what's going on in the data center and what does it mean for future growth in the data center. Does this continue to be the super high margin, again, 70% margins and gross margins are just fantastic for the semiconductor business, better than almost any company has ever done over in this kind of size. It's just amazing. But can that continue? What does it mean for the future of training versus inference? And is inference the place where other competitors are going to find some room to elbow into this fantastic market that NVIDIA has really captured? This is just a great quarter for this company, but we're still a lot of questions about what the future has for us in the near term, let alone the far term, let alone 5 years, Brian.
Yeah, exactly. I mean, it's just incredible to me when we talk about the numbers for this $3 trillion company, that it is seeing its revenue grow 93% year over year, which is about 20 percentage points more than estimated. But I guess as we keep talking about, it's not, we're sort of like, okay, great. So they did another great big quarter, right? It's the market, as we know, is a what have you done for me lately machine. And I guess the question is around what will wow traders enough to continue to bid it up at the same velocity?
Well, traders are going to trade. But I think that when we look at what the value that this company is creating, as you mentioned, the 93% data center growth on a year-over-year basis, and these data center announcements are just stunning. I mean, I was going through Meta's announcements, and they've got this wonderful page that shows the different data centers that they've built, and the $1 billion Altoona, Iowa data center that Meta is building with lots of NVIDIA chips, that there are so many of these projects happening all around the world. And the beneficiaries, I'm trying to figure out, well, who's doing the optical networking in these, and where's the componentry coming from? Now, what's the power usage going to be like? And what are they doing for liquid cooling and making these data centers sort of functionally work? But the commonality in all this stuff is spending on NVIDIA, and that is not slowing down. It's still growing at jaw-dropping, double-digit pace. It's really amazing what's happening with NVIDIA and these numbers. We should take a moment and just appreciate what's happening right now in front of us, because NVIDIA quarter is just great.
Corey, as you look at the competitive landscape, any actual competitive threats for Jensen Huang in the near to intermediate term here?
Yeah. Absolutely. AMD's there. Intel's dead but not out, talking about some things that actually might challenge NVIDIA a couple years from now. And a couple years from now isn't that far away. And so I think there's real concern about competition here because this is a really big market and there's lots of money to be made here. And you can see the competitors coming out in spades looking for that.
Well, I guess we're awaiting the call starting here, Corey. As we, see, I'm sure we'll see more volatility here.
I'm waiting for the 10K, which they've typically put out a day or two afterwards, but sometimes they can surprise us.
What's in the 10K that you'll be looking for?
Well, I don't know. I look for surprises. I look for changes, those little word changes that might mean some new risk introduced or something new about. And there's a lot of questions about what's going on with China, with export controls. It certainly is news coming out of the White House, but I think it's one of the rare places where we've seen sort of bipartisan agreement that China is a threat when it comes to artificial intelligence, and that we've heard some reports that the Trump administration may be looking at further export controls. As this technology evolves, the risk tends to shift around, and Washington has never done well, and the EU has never done well at adopting new risk policies at the rate that the technology changes. Little surprise there. But I think that we do have a sense coming out of Washington that this is a concern that both parties have, and what that's going to mean for the sales of companies like Nvidia and their ability to sell, and ASML and Taiwan Semiconductor, and their ability to sell into China. They want to sell into China. They want to provide their products everywhere they possibly can. Their incentives are different than maybe the incentives of the rest of the national security infrastructure, if you will. And so the effect that will have on sales and growth is significant. Again, I'm looking for numbers out of Singapore. We'll probably get that in the conference call presentation. It's not in the as well as the 10K whenever that comes out. But we'll see in the conference call presentation what's happening with percentage of sales into China, percentage of sales into Singapore, and how that's rising, and then what that might be. One of your earlier guests talked about DeepSeek probably using a lot of NVIDIA chips somewhere. We'd like to see some information about that.
Corey, stick around. We're going to hear from you again shortly after the call. And speaking of, let's get out to the fourth quarter earnings call right now.
2025 revenue was $130.5 billion, up 114% from the prior year. Let's start with data center. Data center revenue for fiscal 2025 was $115.2 billion, more than doubling from the prior year. In the fourth quarter, data center revenue of $35.6 billion was a record, up 16% sequentially and 93% year-on-year, as the Blackwell ramp commenced and Hopper 200 continued sequential growth. In Q4, Blackwell sales exceeded our expectations. We delivered $11 billion of Blackwell revenue to meet strong demand. This is the fastest product ramp in our company's history, unprecedented in its speed and scale. Blackwell production is in full gear across multiple configurations, and we are increasing supply quickly to meet expanding customer adoption. Our Q4 data center compute revenue jumped 18% sequentially and over 2x year-on-year. Customers are racing to scale infrastructure to train the next generation of cutting-edge models and unlock the next level of AI capabilities. With Blackwell, it will be common for these clusters to start with 100,000 GPUs or more. Shipments have already started for multiple infrastructures of this size. Post-training and model customization are fueling demand for NVIDIA infrastructure and software as developers and enterprises leverage techniques such as fine-tuning, reinforcement learning, and distillation to tailor models for domain-specific use cases. Hugging Face alone hosts over 90,000 derivatives created from the Llama Foundation model. The scale of post-training and model customization is massive and can collectively demand orders of magnitude more compute than pre-training. Our inference demand is accelerating, driven by test time scaling and new reasoning models like OpenAI's O3, DeepSeek R1, and Grok 3. Long-thinking reasoning AI can require 100x more compute per task compared to one-shot inferences. Blackwell was architected for reasoning AI inference. Blackwell supercharges reasoning AI models with up to 25x higher token throughput and 20x lower cost versus Hopper 100. It is revolutionary. Transformer Engine is built for LLM and mixture of experts inference. And its NVLink domain delivers 14x the throughput of PCIe Gen 5, ensuring the response time, throughput, and cost efficiency needed to tackle the growing complexity of inference at scale. Companies across industries are tapping into NVIDIA's full-stack inference platform to boost performance and slash costs. Snap tripled inference throughput and cut costs by 66%, using NVIDIA TensorRT for its screenshot feature. Perplexity sees 435 million monthly queries and reduced its inference costs 3x with NVIDIA Triton Inference Server and TensorRT LLM. Microsoft Bing achieved a 5x speedup and major TCO savings for visual search across billions of images with NVIDIA TensorRT and acceleration libraries. Blackwell has great demand for inference. Many of the early GB200 deployments are earmarked for inference, a first for a new architecture. Blackwell addresses the entire AI market from pre-training, post-training to inference across clouds to on-premise to enterprise. CUDA's programmable architecture accelerates every AI model and over 4,400 applications, ensuring large infrastructure investments against obsolescence in rapidly evolving markets. Our performance and pace of innovation is unmatched. We're driven to a 200x reduction in inference costs in just the last 2 years. We deliver the lowest TCO and the highest ROI. And full stack optimizations for NVIDIA and our large ecosystem, including 5.9 million developers, continuously improve our customers' economics.
Are you ready to master the markets and, dare I say, become a better leader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor or you're just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. Podcast that will make you a smarter investor.
Welcome to Stocks in Translation. I'm your host, Jared Blickery. Welcome to Financial Freestyle.
Hi, I'm Bob Powell, and welcome to Decoding Retirement.
Welcome to Living Not So Fabulously.
Welcome to Trader Talk, the podcast that dishes out the market straight up.
Welcome to Capital Gains. I'm your host, Madison Mills.
Welcome to Word Money. I'm Patrick Murphy.
And I'm Dan Coons.
From Wall Street to Main Street to the C-Suite, we are your daily lifeline, because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts.
In Q4, large CSPs represented about half of our data center revenue, and these sales increased nearly 2x year on year. Large CSPs were some of the first to stand up Blackwell, with Azure, GCP, AWS, and OCI bringing GB200 systems to cloud regions around the world to meet surging customer demand for AI. Regional cloud hosting NVIDIA GPUs increased as a percentage of data center revenue, reflecting continued AI factory buildouts globally and rapidly rising demand for AI reasoning models and agents. CoreWeave launched a 100,000 GB200 cluster-based instance with NVLink switch and Quantum 2 InfiniBand. Consumer internet revenue grew 3x year-on-year, driven by an expanding set of generative AI and deep learning use cases. These include recommender systems, vision language understanding, synthetic data generation search, and agentic AI. For example, xAI is adopting the GB200 to train and inference its next generation of Grok AI models. Meta's cutting-edge Andromeda advertising engine runs on NVIDIA's Grace Hopper superchip, serving vast quantities of ads across Instagram, Facebook applications. Andromeda harnesses Grace Hopper's fast interconnect and large memory to boost inference throughput by 3x, enhance ad personalization, and deliver meaningful jumps in monetization and ROI. Enterprise revenue increased nearly 2x year on the accelerating demand for model fine-tuning, RAG, and agentic AI workflows, and GPU accelerated data processing. We introduced NVIDIA Llama Neutron model family NIMs to help developers create and deploy AI agents across a range of applications, including customer support, fraud detection, and product supply chain and inventory management. Leading AI agent platform providers, including SAP and ServiceNow, are among the first to use new models. Healthcare leaders IQVIA, Illumina, and Mayo Clinic, as well as ARC Institute, are using NVIDIA AI to speed drug discovery, enhance genomic research, and pioneer advanced healthcare services with generative and agentic AI. As AI expands beyond the digital world, NVIDIA infrastructure and software platforms are increasingly being adopted to power robotics and physical AI development. One of the early and largest robotics applications in autonomous vehicles, where virtually every AV company is developing on NVIDIA in the data center, the car, or both. NVIDIA's automotive vertical revenue is expected to grow to approximately $5 billion this fiscal year. At CES, Hyundai Motor Group announced it is adopting NVIDIA technologies to accelerate AV and robotics development and smart factory initiatives. Vision transformers, self-supervised learning, multimodal sensor fusion, and high-fidelity simulation are driving breakthroughs in AV development. And we announced the NVIDIA Cosmo World Foundation Model Platform. Just as language foundation models have revolutionized language AI, Cosmos is a physical AI to revolutionize robotics. Leading robotics and automotive companies, including ride-sharing giant Uber, are among the first to adopt the platform. From a geographic perspective, sequential growth in our data center revenue was strongest in the U.S., driven by the initial ramp of Blackwell. Countries across the globe are building their AI ecosystems, and demand for compute infrastructure is surging. France's 200 billion euro AI investment and the EU's 200 billion euro Invest AI initiative offer a glimpse into the build-out to set redefined global AI infrastructure in the coming years. Now, as a percentage of total data center revenue, data center sales in China remained well below levels seen on the onset of export controls. Absent any change in regulations, we believe that China's shipments will remain roughly at the current percentage. The market in China for data center solutions remains very competitive. We will continue to comply with export controls while serving our customers. Networking revenue declined 3% sequentially. Our networking attached to GPU compute systems is robust at over 75%. We are transitioning from small NVLink 8 with InfiniBand to large NVLink 72 with Spectrum X. Spectrum X and NVLink switch revenue increased and represents a major new growth sector. We expect networking to return to growth in Q1. AI requires a new class of networking. Nvidia offers NVLink switch systems for HPC supercomputers and Spectrum X for Ethernet environments. Spectrum X enhances the Ethernet for AI computing and has been a huge success. Microsoft Azure, OCI, CoreWeave, and others are building large AI factories with Spectrum X. The first Stargate data centers will use Spectrum X. Yesterday, Cisco announced integrating Spectrum X into their networking portfolio to help enterprises build AI infrastructure. With its large enterprise footprint and global reach, Cisco will bring NVIDIA Ethernet to every industry. Now moving to gaming and AI PCs. Gaming revenue of $2.5 billion decreased 22% sequentially and 11% year-on-year. Full year revenue of $11.4 billion increased 9% year-on-year, and demand remained strong throughout the holiday. However, Q4 shipments were impacted by supply constraints. We expect strong sequential growth in Q1 as supply increases. The new GeForce RTX 50 series desktop and laptop GPUs are here. Built for gamers, creators, and developers, they fuse AI and graphics, redefining visual computing. Powered by the Blackwell architecture, 5th generation Tensor cores, and 4th generation RT cores, and featuring up to 3,400 AI TOPS. These GPUs deliver a 2x performance leap and new AI-driven rendering, including neural shaders, digital human technologies, geometry, and lighting. The new DLSS 4 boosts frame rates up to 8x with AI-driven frame generation, turning one rendered frame into 3. It also features the industry's first real-time application of transformer models, packing 2x more parameters and 4x the compute for unprecedented visual fidelity. We also announced a wave of GeForce Blackwell laptop GPUs with new NVIDIA Max-Q technology that extends battery life by up to an incredible 40%. These laptops will be available starting in March from the world's top manufacturers. Moving to our professional visualization business. Revenue of $511 million was up 5% sequentially and 10% year-on-year. Full year revenue of $1.9 billion increased 21% year-on-year. Key industry verticals driving demand include automotive and healthcare. NVIDIA technologies and generative AI are reshaping design, engineering, and simulation workloads. Increasingly, these technologies are being leveraged in leading software platforms from Ansys, Cadence, and Siemens, fueling demand for NVIDIA RTX workstations. Now moving to automotive. Revenue was a record $570 million, up 27% sequentially and up 103% year-on-year. Full year revenue of $1.7 billion increased 55% year-on-year. Strong growth was driven by the continued ramp in autonomous vehicles, including cars and robotaxis. At CES, we announced Toyota, the world's largest automaker, will build its next generation vehicles on NVIDIA Orin, running the safety-certified NVIDIA Drive OS. We announced Aurora and Continental will deploy driverless trucks at scale powered by NVIDIA Drive Thor. Finally, our end-to-end autonomous vehicle platform, NVIDIA Drive Hyperion, has passed industry safety assessments by TÜV and TÜV Rheinland, two of the industry's foremost authorities for automotive-grade safety and cybersecurity. Nvidia is the first AV platform to receive a comprehensive set of third-party assessments. Okay, moving to the rest of the P&L. GAAP gross margins was 73%, and non-GAAP gross margins was 73.5%, down sequentially as expected with our first deliveries of the Blackwell architecture. As discussed last quarter, Blackwell is a customizable AI infrastructure with several different types of NVIDIA build chips, multiple networking options, and for air and liquid-cooled data center. We exceeded our expectations in Q4 in ramping Blackwell, increasing system availability, providing several configurations to our customers. As Blackwell ramps, we are low 70s. We are focused on expediting the manufacturing of Blackwell systems to meet strong customer demand as they race to build out Blackwell infrastructure. The cost and gross margin will improve and return to the mid-70s late this fiscal year. And non-GAAP operating expenses were 11%, reflecting higher engineering development costs and higher compute and infrastructure costs for new product introductions. In Q4, we returned $8.1 billion to shareholders in the form of share repurchases and cash dividends. Let me turn to the outlook in the first quarter. Total revenue is expected to be $43 billion, plus or minus 2%. Continuing with its strong demand, we expect a significant ramp of Blackwell in Q1. We expect sequential data center. We expect sequential growth from both compute and networking. GAAP and non-GAAP gross margins are expected to be 70.6% and 71%, respectively, plus or minus 50 basis points. GAAP and non-GAAP operating expenses are expected to be approximately $5.2 billion and $3.6 billion, respectively. We expect full year, fiscal year 26 operating expenses to be in the mid-30s. GAAP and non-GAAP other incoming expenses are expected to be an income of losses from non-marketable and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 17% plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website, including a new financial information AI agent. In closing, let me highlight upcoming events for the financial community. We will be at the TD Cowen Healthcare Conference in Boston on March 3rd, and at the Morgan Stanley Technology, Media, and Telecom Conference in San Francisco on March 5th. Please join us for our annual GTC conference starting Monday, March 17th in San Jose, California. Jensen will deliver a news-packed keynote on March 18th, and we will host a Q&A session for our financial analysts the next day, March 19th. We look forward to seeing you at these events. Our earnings call to discuss the results for our first quarter of fiscal 2026 is scheduled for May 28th, 2025. We are going to open up the call, operator, to questions. If you could start that would be great.
Just hearing from NVIDIA's Chief Financial Officer, Colette Kress there. A couple of comments she talked about. She gave some of the forecasts, some more detail on Blackwell, on the ramp up that they are undergoing in terms of production there, talking about the first quarter we'll see a significant ramp of Blackwell and manufacturing of that chip. For more on the latest from NVIDIA's earnings report and call, we're bringing back Corey Johnson, Chief Market Strategist at Epistrophe Capital Research, host of the Drill Down podcast. I imagine Colette probably wasn't listening to our conversation before the call, but she seemed to be speaking directly to one of the points that we spoke about just a few moments ago, and that has to do with inference. And this is something that's not new, right?
Yeah.
Nvidia has maintained all along that its Blackwell chips were good for not just training, but for inference. But she really hammered home that point again. She said Blackwell has great demand for inference and talked about the continuing need for and demand for companies who are using it for all kinds of applications. I'm just curious, did you clock that as well, Corey? And what did you think of that commentary?
So Nvidia has, and Jensen Huang in particular, has they're taking great pains to talk about other markets that are out there, whether it's automotive, gaming, which they used to talk about and still talk about. They talk about robots. They've made some investments there. They've had robots out of their Nvidia GTC trying to show off all these other places that AI will be used and the places that they can sell chips into. They want it like all the companies in Silicon Valley that surround me, all the startups that surround me here in San Francisco. They want to tell us that the TAM, the total addressable market, is bigger than what we can see. And it indeed may be. But I think that that's not very different from them, from what we've heard in the past for this company. They want us to think that the TAM is huge. One of our challenges of investors is not to imagine how great things can be, but also to imagine how bad things can be in the future. So while she was talking, they actually filed their 10K during the call, and I was rapidly going through there looking for changes and risk factors, and there aren't a lot of huge changes. I will point to one thing that isn't a big change. It's a change from last year's 10K, but not a change from prior reports that we've seen, which is they mentioned that these Singapore sales that I brought up, I only bring it up because I brought it up before, aren't necessarily sales of chips physically into Singapore, that they actually told us that that's single digits in the quarter, but they reported revenues attributed to Singapore are in double digits. So we'll make of that what we will as it relates to export controls and other places in the region trying to find a place that they can get the chips, at least attribute their bills to. There's a lot of talk in the 10K, new risks entered about export controls and the effects of export controls, including something called AI diffusion IFR, and designation of China and 150 companies designated as tier 2. Sorry, I'm reading from the 10K at this moment. And so the concerns that this could actually dampen sales in the future for Nvidia. Now, this in the context of the actual numbers. So the actual numbers that we can see in this 10K, and again, the actual, at least I was looking on the website and didn't see an update of the presentation materials while the CFO was talking here. But we can see in the numbers, they give us the annual numbers. If you strip out what they did earlier in the year, you can figure out what the quarterly numbers are. They saw revenues into China, in spite of all these export controls. Again, a year ago in the fourth quarter, sales into China were under $2 billion. In this quarter, they were over $6 billion. So fantastic growth in sales to China, despite these export controls. I think that's an area of concern and something to watch for when you want to imagine and pencil out the growth in Nvidia in the future.
Corey, DeepSeek is going to be front and center on this call. I would imagine, they're going to get plenty of questions on that. What do you think Jensen Huang has to say to sort of allay any jitters about that?
I've been covering semiconductors for decades, and this cost of semiconductors drops by half about every other year. And yet the usage of semiconductors has gone through the roof every single year. So I think that he'll probably say something of that sort, that more efficient AI models means that you do more with AI, and that's nothing but good for Nvidia, and I think that's exactly right.
Corey, we are going to check back in with you in just a few minutes, my friend. Stick around. Nvidia, meanwhile, having its earnings call as we speak, and Yahoo Finance tech editor Dan Howell, he's listening in to the call. Dan, what are you hearing so far?
Yeah, Josh, a few things that we want to point out. First, it seems like Jensen Huang's basically touching on all of the concerns that investors have raised over the past few months with regards to NVIDIA's performance, whether that's DeepSeek or cloud service providers, things along those lines. We actually have a quote from Colette Kress during the call where she references inference demand. We were just speaking with that, as well as DeepSeek. Have a listen.
Our inference demand is accelerating, driven by test time scaling and new reasoning models like OpenAI's O3, DeepSeek R1, and Grok 3. Long-thinking reasoning AI can require 100x more compute.
And so that's one of the points that a lot of investors had brought up was, that when DeepSeek came out, it used these lower powered chips, does that mean then that Microsoft's, the Amazons of the world don't need to buy the more expensive chips? Well, according to Nvidia and Colette Kress, CFO, no. There was also talk of the companies that are adopting some of the chips. We actually have a quote there on what XAI and Meta are doing.
XAI is adopting the GB200 to train and inference its next generation of Grok AI models. Meta's cutting-edge Andromeda advertising engine runs on Nvidia's Grace Hopper superchip.
And then they also discussed where they're seeing the most revenue. Obviously, the U.S. is its largest market, and they said that they'll continue to see sequential growth there. They did also touch on China, and obviously, we think about that. You think about the export controls there that are the reason why DeepSeek had to use the H20 chip that kind of raised all those concerns. Well, they say that they expect that revenue will remain where it is, which is below levels prior to the onset of export controls, and that's just to be expected. We know President Trump obviously discussed potentially adding more export controls, so we'll see what happens there. And then finally, they talked about gross margin, and they said how in the coming quarters, the next quarter, they expect to see gross margins in the low 70s. That's part of the Blackwell ramp, but then at the back end of the year, they expect that to return to the mid 70s at some point.
Dan, I know we don't talk about it as much, and for good reason, but what about the gaming business, Dan, the gaming division? What are we seeing there?
Yeah, I mean, gaming took a hit, obviously, in this quarter just because of the issues related to the ramp of their Blackwell-centric cards, those 50 RTX 50 series cards. And so they did say that they expect that to return to growth in Q1. It's just a matter of getting those cards into consumers' hands. And, look, I'm the kind of guy who would buy a $2,000 graphics card and then regret it immediately. But still, even if I wanted to, I can't get my hands on it. They sell out right away. So it's going to be an ongoing problem for Nvidia with regards to the gaming business. It would have been a much larger problem, a couple of months ago, if not for the fact that the data center is so much larger than gaming now.
Dan, thank you so much. We'll be checking in with you again. Appreciate it. Stick around. More of Yahoo Finance's special coverage of Nvidia's earnings coming right up.
Nvidia are delivering another solid quarter, but investors keeping a close eye on commentary on China and export controls. And joining us now is Riva Gujan, Rhodium Group Director. Riva, it is good to see you. So, Nvidia reports there were a lot of questions about U.S. export controls, how they would affect the company's business. Frankly, when you look at the company's forecast, top line is better than what the street was looking for. I am curious, though, how you think about U.S. chip controls going forward. As a policy tool, as a lever, how do you see them playing out and developing from here?
Well, to answer that question, we have to look at what the DeepSeek disruptor actually did, right? And DeepSeek was a massive catalyst for both open source AI development, but also the deployment of efficient reasoning models. And so what DeepSeek did was it basically just squeezed every bit of compute that it could and did a lot of really clever algorithmic innovations to optimize what actually OpenAI had done just 4 months prior to the DeepSeek release and creating this new paradigm in reinforcement learning with its O1 model. So that then just raises a question, right? That was a really short timeline where there was just 4 months between a very expensive American frontier model paradigm shift in reasoning, and then we had the release of a budget Chinese open source reasoning model, which then raises the question of, okay, how does the US then protect massive upfront investments in frontier model development? So to the issue of controls, right? Okay, chip controls are already in play. Those are going to likely be expanded. So there's a lot of speculation over how many H100s and H800 NVIDIA chips DeepSeek actually had access to in the past couple of years where those chip controls were ratcheting up. Those are now restricted. But now the question is those below threshold chips that NVIDIA designed to be compliant with U.S. export controls, but which can still be used toward this type of model development. So that scope expansion is kind of like the most obvious area, I think, where you're going to see chip controls go. But there's another massive area here, too, which is U.S. strategy is trying to throttle, essentially, Chinese chip production, throw sand in the gears so that SMIC, China's main foundry, runs into huge challenges in trying to produce at scale a bunch of these AI chips that Huawei's HiSilicon is designing, because that's China's best bet in keeping up with this AI race now that it's already made this big open source play in model development. The key thing there is that the servicing of manufacturing equipment in the foundry, that is an area where the U.S. just does not have partner alignment. So basically, ASML and Tokyo Electron engineers are still kind of servicing equipment there, and the U.S. wants that to stop. So that is also another area to watch next, where I think you would see the Trump administration probably take, let's say, a less polite, a less accommodating stance toward partners on this really critical export control issue.
So obviously, some of this, the first item you mentioned, more of a risk to the likes of Nvidia than the second, right? Because they don't use SMIC, they use Taiwan Semiconductor. But I guess the sort of bigger question beyond Nvidia is, will it work, right? Yeah. Because we've seen the limited export controls. If the goal was to throttle the industry and then you have DeepSeek, that wasn't probably the outcome that was desired, right? So does further throttling achieve that outcome, or does it make the Chinese industry more creative?
Well, here's the thing, right? And the NVIDIA earnings call really articulated this well, that compute still really matters, right? So what DeepSeek showed with inference scaling, that's off to the races, right? But that's happening in parallel to the training paradigm, which is, that we're going to have frontier model developers building bigger and better models, right? So compute still matters. So access to the bleeding edge technology is still going to matter as well, right? China's not going to have access to Blackwell architecture. It doesn't have access to EUV lithography to build cutting edge chips. It's going to do whatever it can to produce as many chips right now it's at a 7 nanometer class process node capability. And there's a question, is that going to be enough to meet all this rapidly growing demand just in the Chinese market itself? And so that's also where US strategy is basically saying, look, we accept that US tech controls are going to accelerate Chinese tech indigenization. That's a given, that's happening. But the US wants to make sure that China's left high and dry here, that there aren't foreign suppliers that are helping China in its self-reliance aims. And so that's where there was a really interesting rule passed in the final days of the Biden administration, which was it was called the Foreign Foundry Rule. And it basically restricts Chinese chip makers from relying on TSMC to produce advanced node chips, basically because of these really stringent due diligence requirements. And that puts the onus then on SMIC to be able to produce in much larger volumes. And that is the ultimate test here. Chinese chip production is going to continue to optimize. There are going to be these engineering efficiencies that we're going to see come through. But it's just a question of how much of a gap can you create in the US by this migration to bleeding edge technology while China's doing everything it can with the constraints that it has.
Reva, I'm curious, if we not only maintain but expand those export controls, how would you expect China to react to that?
Not well, but I think it expects it, right? And it's preparing it. And this is exactly why China is doubling down on open source development. That is its lifeline. It can't compete with closed weight model developers like we have in the US because it just doesn't have that access to compute, right? And so, as we look at the nature of U.S. export controls, it's going to be really interesting to see chip controls, right? When we get into restrictions around cloud service providers and how stringent do those get, access to models via API, via cloud. And then when you get into open source, if you start restricting model weights for a company like Meta with its Llama model, you would basically be ceding the ground to China in this open source competition, right? So lots of issues for the U.S. and where to go next, but from China's perspective, they already see that those chip controls are tightening. They're in an increasingly existential position over that. But the efficacy of export controls is what matters here. If the U.S. gets alignment from partners on things like servicing, like I mentioned earlier, that's going to hurt a lot more. And that's where we need to watch Chinese retaliation, not just against the U.S., but also to key partners like Japan and the Netherlands.
Well, and also, I got to throw a Taiwan question in there, because I've seen some reporting that Taiwan is watching the U.S.'s sort of retreat of support or pullback in support from Ukraine with alarm, and raises concerns about what it means for U.S. support of Taiwan. So I'm curious how you're thinking. I mean, that's a separate issue, obviously, but I'm curious how you're thinking about that.
It's separate, but it's totally connected at the same time, right? Because at the same time, you have, on the one hand, Trump transactionalism in play with Taiwan, trying to bring more TSMC investment to the United States, through a number of sort of coercive threats like tariffs and other things. And then at the same time, China is feeling more and more cornered by these technology controls, which are bound to tighten further. So there's a question, right, of also how Beijing is looking at the diplomacy over Ukraine and saying, okay, if this is an American president that is really keen on getting a quick deal, and you can basically diplomatically reengage and get some, business, reengagement out of a quick peace deal, then is it worth a short and sharp conflict? For example, imposing a customs quarantine that asserts China's claims to Taiwan in ways that, it can basically consolidate some territorial gains and come out of this okay at the end of a Trump administration. That's a short window, but I imagine that's a lot of what Beijing is watching, and also trying to assess to what degree is U.S. plays on Ukraine actually going to result in a pivot to the Indo-Pacific security, and whether that's actually going to result in real security guarantees or not. So, tech controls can push China into confrontation on Taiwan, where it could leverage a security crisis. But that Ukraine variable is also going to be really significant in informing Beijing's calculus. But at the same time, Trump transactionalism can actually create immense changes to semiconductor supply chains, even short of a real crisis over Taiwan.
Riva, this is all really fascinating. I guess if you put it all together and you're an Nvidia investor and you're trying to figure out how to game all of this out, obviously there are so many unknown variables. Do you just kind of put it to the side now because Nvidia has limited its China exposure already to some degree?
Well, no, you actually have to dive in deeper, and you have to look at this very methodically in terms of scenarios where you have to look at the trajectory of U.S.-led technology controls, the degree of partner alignment that the U.S. is able to coerce, basically, at this point. You have to look at China's technological and economic performance. Is it able to make a big industrial AI breakthrough? Is it able to produce the AI chips it needs to keep pace with the US in AI competition? And then lastly, you need to look at the Taiwan variable, which, as we were just talking about, is also a function of what happens on the European continent with Ukraine. So these all intersect in this really fascinating way, and you have to be able to see how that picture is moving basically week by week.
Riva, thank you so much for your perspective on this. Really, really helpful stuff.
Thank you.
Stick around. We've got more of Yahoo Finance's special coverage of Nvidia's earnings. Up next, a closer look at the technicals of Nvidia's shares and what we can learn from the options market. Nvidia topping estimates on the top and bottom line for the fourth quarter and providing an upbeat outlook. The shares have been bouncing around. Right now, they're up almost 2%. The options market was expecting Nvidia to move 10% in either direction on earnings. That's what it was pricing in. Here with a closer look at sentiment on Nvidia, we've got Jessica Inskip, stockbrokers.com, Director of Investor Research. Jessica, it's good to see you here. So, we've really had the shares kind of feeling indecisive, although settling a little more solidly into the green during the call here. How is options activity leading up to the earnings sort of playing out now that we've got them?
Well, I think it's so interesting. The options market was actually very correct if you take a deeper dive. So when we're looking at the implied move, which is something we utilize, that's just looking at almost a similar calculation to the VIX. That's just the uncertainty that's priced there. If we're to pull about a year ago, we actually have a 75% increase in total options volume from this time last year, which I think is so interesting. But when I'm pulling those moves or seeing where there's positioning, I want to understand, okay, if we are long and we're bullish, because options can also be sold and be bullish or sold and be bearish, we have to look a lot in the detail, and it is only ever so slightly bullish, and which is exactly what we're seeing after hours.
Give me the trade idea, Jessica.
Yeah, so what's interesting in the way that I like to play this, options, because of uncertainty, are priced with more than just the underlying security. It's implied volatility. Implied volatility is amplified around earnings. So what we would do is create a short iron condor. I know that sounds complex, but it's a volatility play, which is an extrinsic value decay, which happens once uncertainty is removed, which is earnings expectations. So what we do is we take that implied move. Nvidia closed around the 131-ish range. So we go 10% up, which is that move, 10% down. We essentially create this range where we have our credit call spread on the top and our credit put spread on the bottom. A credit put spread is profitable as long as you close at or above the strike, and a bear puts or a bear call spread as long as you close at or below the strike. So essentially what Nvidia is doing right now, as long as it stays within that range, which is 118 to 145, 10% up or down, you capture this credit, have very minimal risk. It's so skewed in your favor around this time frame, and are profitable capturing that full credit.
Well, and Jessica, remind me, what's the time frame for that?
So you could do this in a lot of time frames. I prefer around 30 to 45 days, because whenever we're selling options, because options have that time premium associated with it, I also want to optimize that as well. And a really great example of this type of normal trade, if we were to do this tomorrow or not around earnings, we look at a risk to reward ratio, usually of a 3 to 1 or a 1 to 3, meaning if I capture a credit, I'm going to end up losing about 3 times because of the probabilities. In this case, it's a 1 to 1. That's what I mean by risk reward is so skewed in your favor. It's such a complex trade, but all we're doing is creating a range, selecting about 30 days out to capture theta decay. You get a credit of about $500, but your maximum loss is also $500. Whereas in a normal environment, it would be your maximum gain is 500, max loss about 1,500. So that's what I mean by skew risk reward heavily in your favor because of amplified options. People are betting on direction. In this case, you're choosing the highest direction and assuming that it's going to stay within that range, which is what's happening right now.
Jessica, I'm curious, when you look at the charts, what do the technicals tell you right now for NVIDIA?
Yeah, that's so important, and I think it goes into the overall market. So when I look at the charts, I love to look at a longer period, and I use weekly intervals. And I'm looking at the 13, 26, and 40 weekly moving averages. The reason for that is we're looking at the market quarterly. 13 weeks is roughly about 1 quarter, 26 to 43. NVIDIA is actually sitting in between those weekly moving averages, so 1 quarter worth of prices and 3 quarters worth of prices, which means this is a decisive moment for NVIDIA. The technicals are saying we need a catalyst of some sort to get us out of this range bound that we've found, and the moving averages are certainly mirroring that. So actually, tomorrow, once we get some activity, I would love to see a weekly close above 135. That will put us above the 13 weekly moving average and put us back into a better position to rally and hit new highs.
Jessica, appreciate your time in the trade. Thanks for joining us.
Thank you.
Stick around, more of Yahoo Finance's special coverage of NVIDIA's earnings coming right up.
Blackwell Ultra is second half. As you know, the first Blackwell was, we had a hiccup that probably cost us a couple of months. We're fully recovered, of course. The team did an amazing job recovering, and all of our supply chain partners and just so many people helped us recover at the speed of light. And so now we've successfully ramped production of Blackwell. But that doesn't stop the next train. The next train is on an annual rhythm, and Blackwell Ultra with new networking, new memories, and of course new processors, and all of that is coming online.
That was Nvidia CEO Jensen Huang on the company's latest earnings call. For more on the latest from the report and the call, Corey Johnson back with us, Chief Market Strategist at Epistrophe Capital Research, host of the Drill Down podcast. And Corey, the commentary on Ultra really interesting there because, part of the concern and the question on the call was about whether Ultra was going to cannibalize demand for Blackwell, because they keep coming out with these new chips so quickly here. And Huang said that Ultra is going to come in the second half, and you can kind of use it. It sounds like you can kind of use it interchangeably with Blackwell itself. But the product cycles here are pretty interesting.
And we'll find a lot more at GTC in another few weeks or so. But what we know about the development of these products is that there are these iterative changes and these really big changes. Blackwell was a big change. It was a big change in process technology in particular, and the way that these chips and chiplets around it are made was extraordinarily complicated. Most complicated semiconductor probably ever manufactured. So it makes sense that there were some problems and hiccups along the way. The other thing we know about the history of semiconductors is that customers always overorder during boom times because they can't get enough, and they promise they're good for the orders. And then when the boom slows down or a competitive product arrives, there's oversupply. And so, it has always been thus with semiconductors, and we continue to watch for that. But right now is boom time. And when we see these announcements over and over again of hundreds of billions of dollars to be spent to building data centers, it's good news for Nvidia. The last note I'll leave is that I was also looking at the earnings from Synopsys at the same time, a company that has software to help semiconductor companies and semiconductor users design new semiconductors. And they saw 11% rise in revenues on a year-over-year basis, 15% for the year, showing us that there is continued strong double-digit demand to design new stuff using all these fantastic semiconductors. A really bullish underpinning of this industry that suggests that the oversupply problems and things that will eventually hit this company aren't anywhere near to Nvidia right now.
Corey, my friend, we could not have done it today without you. Thank you for sticking around. Appreciate it.
Always good times, guys. Thank you.
Nvidia's fourth quarter sales rising 12% from the previous quarter. Looking ahead, the chip giant is expecting a ramp of Blackwell in the first quarter, while CEO Jensen Huang touts Nvidia's new generation of AI chips. Here with more is CFRA Research Senior Equity Analyst Angelo Zeno. Angelo, it is good to see you. So listen, you saw the print. You've been listening to the call. Angelo, give us your high-level takeaways. What'd you make of this report?
I thought it was a good report. I thought it was a good call overall. I think Jensen addressed as much as he possibly could in terms of some of the issues that are out there. Clearly isn't going to be able to kind of give all the answers and kind of alleviate all the concerns that are out there in the market. But as far as the results are concerned, I mean, listen, better than expected October quarter results. January quarter results in terms of the April guide. Also on the top line was better than expected. I think really the key was the Blackwell revenue out there at 11 billion out there, and the fact that the guidance out there implies that, hey, listen, we've kind of resolved a lot of the supply constraints out there, and we are successfully ramping here. I think that really is the key out there. And then as far as the margin issues are concerned, that's the big one out there. Again, on the call, they kind of reiterated their stance on the fact that, hey, listen, we're going to bounce back here likely after, this weak April quarter gross margin guide back to the mid-70s, hopefully at some point in the second half of the year.
Yeah, and just to let viewers know what you're referring to there in particular, the company saw its gross margin at 73.5% in the fourth quarter, which was matching what analysts have been anticipating. In the first quarter, adjusted gross margin going to be at most 71.5%. It said 72% is what analysts on average were looking for, but the company has talked about that it's going to get back up into the mid-70s. Colette Kress saying that at some point this year. She was asked about that on the call to sort of drill down into that a little bit more. And she talked about perhaps improving costs, right? Cutting out costs as they get more adept, I guess, with the supply chain. Are you reassured by that? Do you think they can get back up to that mid-70% range?
No, we do. And, it's not very uncommon when you kind of start new product cycles like this. And listen, Blackwell is still in its early days, right? I mean, when you think about it, I mean, we did see kind of that 3-month delay early on. And, we are kind of at least we started slowly ramping here in the January quarter. And again, it's going to be a more pronounced ramp as we kind of go here in the April quarter and the July quarters out there. They've got a huge pipeline out there. We have no kind of concern as far as, or didn't have any concerns as far as the visibility was concerned. It was more about the execution side of things. And of course, the costs typically are higher early on in these kind of cycle ramps. And as you kind of start ramping, that revenue, those costs start to subside, and I think that's clearly what you're seeing here, and they're going to be able to kind of improve some of the efficiencies across the supply chain here over the next couple of months.
Angelo, sometimes you'll hear talk whether Nvidia is too reliant on this handful of hyperscalers, those big cloud giants. And Jensen Huang said on the call, it was interesting, he said over time, he says, it's the enterprise market will expand to be far larger than that hyperscale market. You believe that, Angelo?
I think that's the hope, right? I mean, we're kind of migrating towards, this world of AI agents out there. And eventually, it's going to be all about the physical AI world, and that's really something that Jensen Huang believes in. And as you kind of think about that physical AI world, I mean, it's gonna require the enterprise space to really kind of more aggressively invest out there, on the inference side of things. And, we're believers of that. I think, the question is, how long does this take? Right now here, that about half their revenue right now is tied to these hyperscalers. We don't think that changes much here over the next couple of quarters. It will continue to be largely driven by these hyperscalers out there. But we do think over time, the fastest growth area within their kind of ecosystem is going to be, on the enterprise side of things. The question is, again, it's probably 2 to 3 years or even, more than that down the road. It's not something you're likely going to see at least over the next 4 to 6 quarters in our view.
Is there any vulnerability in being so exposed to the hyperscalers, Angelo?
I mean, there's always vulnerability to it, but I will say this. I mean, when you kind of think about these data center cycles and you kind of think about who these customers are, I mean, they are literally investing, in compute, utilizing all free cash flow out there, right? It's not like they're borrowing or doing what what a lot of these telcos did back 25 years ago in terms of what they had to do with Cisco out there. So it's a much different world out there. And, given the free cash flow trajectory of these companies, the need for a significant amount of compute here over the next kind of 5 to 10 years, and you kind of think about just the overall cloud environment and the growth of cloud here looking ahead, we feel very confident, or much more confident, with them being kind of tied to those hyperscalers out there than we would any other kind of customer category out there. So from that perspective, I think you should be okay with that. But there's always concerns of kind of overbuild and what have you. I don't think you're at that point in the cycle yet, and you never know kind of how long these kind of data center cycles really last. I mean, it could last 5-6 years for anyone knows. So it'll be interesting to kind of see how this cycle plays out to other cycles.
Yes, it will, Angelo. Thank you so much for your perspective. Appreciate it.
All right, thanks for having me.
Are you ready to master the markets and, dare I say, become a better leader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor or you're just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. Podcast that will make you a smarter investor.
Welcome to Stocks in Translation. I'm your host, Jared Blickery.
Welcome to Financial Freestyle.
Hi, I'm Bob Powell, and welcome to Decoding Retirement.
Welcome to Living Not So Fabulously.
Welcome to Trader Talk, the podcast that dishes out the market straight up.
Welcome to Capital Gains. I'm your host, Madison Mills.
Welcome to Word Money. I'm Patrick Murphy.
And I'm Dan Coons.
From Wall Street to Main Street to the C-Suite, we are your daily lifeline, because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts.
We're still digesting Nvidia's earnings report, and who better to round things up than to bring back Yahoo Finance tech editor Dan Howley, listening on the call for us. What were the highlights for you? What really stood out for you?
Yeah, I think some of the kind of ways that Jensen Huang and Colette Kress attempted to address some of Wall Street's concerns, investors' concerns around a litany of topics, whether that was China saying that, look, China revenue is below where it was prior to the export controls. It's going to stay there more or less at the levels that they're seeing, whether that was ASICs, those chips that are specific for certain tasks. Jensen Huang basically saying, look, they're not going to be as good as what we have to offer. Those are application specific, and our chips are general. They address everything. There's also the idea of perhaps running out of runway when it comes to the cloud service providers. But to that, Jensen had said, look, there's still commercial space. We have a clip for that.
We've really only tapped consumer AI and search and some amount of consumer generative AI, advertising, recommenders, kind of the early days of software. The next wave's coming. Agentic AI for enterprise, physical AI for robotics, and sovereign AI as different regions build out their AI for their own ecosystems.
So just kind of, Jensen's way of going over the different ways that NVIDIA is able to kind of spread out beyond just the cloud service providers that, again, provide the 50% of data center revenue for them right now. He's saying that there's other opportunities available that are going to spring up over time. And, we talked about Blackwell Ultra earlier, but they also touched on Vera Rubin, which is going to be the next chip that they announce. And hopefully we'll hear more about that at GTC next month.
Dan, you think Jensen Huang and Colette Kress, did they do enough, do you think, on this call to address any DeepSeek jitters that are out there?
Oh, yeah. I mean, they touched on that, basically from the jump. Even before they got on the call, they did it in the actual earnings release, saying, the kind of longer amount of time a model needs to think, the more processing power it needs. And so that's a reason why cloud service providers or other companies would want to invest in NVIDIA's heavy duty chips, the Blackwells. And so not necessarily those H20s that DeepSeek had managed to use to develop that R1 model, but these larger kind of heavy duty ones that Meta's buying up, Tesla's buying up, Microsoft's buying up, and how those will enhance models like DeepSeek's R1 or V3. So I think they really did manage to hit on that pretty much throughout from the time that they actually released the numbers to the end of the call. It seemed as though they really wanted to touch on those a good deal.
Dan, thanks so much. Not sure how much they convinced the shareholders. The stock is still kind of bouncing around the flat line here. Dan Howley, thank you so much. Appreciate it.